एवरीवन, गुड मॉर्निंग, गुड आफ्टरनून, गुड इवनिंग टू ऑल ऑफ यू। आज है ओके गाइस। तो क्रूड ऑयल को देखोगे, एक हल्का सा गैप अप ओपन हुआ था कल का, एक छोटा रेजिस्टेंस था, उसके ऊपर निकल गया था, ऊपर एक और रेजिस्टेंस है, मिलता है ऊपर ऊपर आता है, तो एक यहाँ से छोटा सा सेलिंग का ट्रेड वापस प्लान हो जाएगा फ्रॉम दिस पर्टिकुलर जोन। यहाँ से एक वापस सेलिंग का प्लान कर देंगे क्रूड ऑयल में। फिलहाल के लिए अच्छा लेवल है, तो लेट्स सी जैसे ही ब्रेकआउट करता है फिर देखते हैं। ये ऊपर आता है तो 5160 से 180 के बीच में कहीं पर भी सेल कर सकते हैं, कोई सुनिए। और वापस पुल बैक करेगा तो वापस बाइंग का प्लान करेंगे 5060 से 5050 के बीच में कहीं। बाकी एक बार देखते हैं, कैंडल क्लोज करता है तो एक कैंडल ऊपर क्लोजिंग भी चाहिए 5107 के ऊपर। बाकी नेचुरल गैस को अगर देखें, नेचुरल गैस भी कल मार्केट ने एक सपोर्ट था वो ब्रेक डाउन कर दिया था क्लोजिंग होते होते, बट आज ऑलरेडी गैप अप ओपन हुआ तो रिकवर कर गया, फेक ब्रेक डाउन कह सकते हैं। कोई बाइंग में है तो ट्रेल करना, वापस नीचे आता है तो वापस बाइंग करेंगे बीच में। ये टारगेट, ये जो एफईजी बना हुआ है यहाँ तक रखा जाएगा। ठीक है, अगर वापस नीचे आता है वापस ट्राई किया जा सकता है। निकल चुका है ऊपर तो अब तो यहाँ पर नहीं ले सकते ऑलरेडी। तरह से ब्रेकआउट हुआ था ऐसा लग रहा था कि नीचे ही जाएगा, बट जिस तरह से वापस रिबाउंड किया है, गुड साइन एक्चुअली, आई वुड से काफ़ी अच्छा साइन है कि लेवल अभी भी होल्ड किया है प्राइस। ओके देखो, एक कैंडल क्लोज हो जाए तो बेटर रहेगा मेरे अकॉर्डिंग 5110 के ऊपर। 5110 कैंडल क्लोज मस्ट बी देयर। कैंडल क्लोज होती है तो फिर मोमेंटम अच्छा आ जाएगा एक्चुअली में। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम।
Vodafone Business.
Negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure, and there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Kuala Lumpur. This is Bloomberg.
Welcome back to the opening trade. We're 44 minutes into our European trading session and seeing some weakness across European equity markets. US futures, though, point higher, focused on trade themes. Let us turn to some geopolitical news coming to us from Asia. India says it has struck 9 targets in military strikes against Pakistan. The tit-for-tat blows come after a militant attack that killed 26 people in Kashmir last month. India says it only hit what it called known terror camps.
These actions were measured, non-escalatory, proportionate, and responsible. They focused on dismantling the terrorist infrastructure and disabling terrorists likely to be sent across to India.
Pakistan says the strikes killed 26 civilians, adding that it shot down 5 Indian jets in retaliation. Its defense minister explained his country's actions.
This has been initiated by India. If India is ready to back down, they have taken the initiative. We have just responded. We have been saying all along in the last fortnight that we'll never initiate anything hostile towards India. But if we are attacked, we'll respond. If India backs down, we will definitely wrap up these things, But as long we are under attack, under fire, we have to respond. We have to defend ourselves.
Bloomberg's Pakistan bureau chief, Fasi Mangi, joins us now. Fasi, take us through the latest developments here. What has been happening in the last few hours?
Yes, thank you for having me. So basically in the past few hours, what we've seen is that both sides, Pakistan and Indian officials, have given some details on what happened during the middle of the night. And as you played the Indian Foreign Secretary clip, he basically says that they've targeted multiple areas in Pakistan. They haven't hit any civilians, but Pakistan says otherwise. They also did not talk about Pakistan claiming that they have shot down 5 Indian planes. So there is no address to that. But the latest what we understand is from both sides is that this is not over yet. I think that is the main thing to get. Pakistan has said that it will strike back. It will strike back at its own choosing of time and day. So the retaliation is there, and the Indian official also mentioned that they have intelligence that there will be some strike at some point in time. So that is what everyone is watching out for now.
Fussy, you mentioned that the conflict is not indeed over. What does a further escalation look like? Is there clarity on that?
Well, I think that is the million-dollar question right now. We have seen in the past that there has been a tit for tat. So basically, one side does a strike, and the other side does a similar strike, and it ends over there. If Pakistan strikes and it ends over there, which we have seen historically in a few cases with Pakistan, then we can see that it ends over there. But if it doesn't end over there and India decides to respond again, then we are heading in a tricky situation.
Bloomberg's Pakistan Bureau Chief Fussy Mungi joining the program this morning, giving us the context from Karachi. We thank you so much, Guy.
Let's turn our attention to one of the other pieces of political news that we got yesterday, this time centred around what was going on in Berlin. Germany's new Chancellor making his first trip abroad today after surviving what can only be described as an embarrassing stumble in his efforts to take power yesterday. Friedrich Merz initially failed to win enough votes in Parliament, in the Bundestag yesterday, to take office.
Today, I have the honor of assuming the office of Federal Chancellor in this House. First of all, I am grateful for the support of the voters and also for the trust of the members of the German Bundestag that I have received today. In the second round of voting, I am very aware of the responsibility that this office entails. I accept this responsibility with humility, but also with determination and confidence, ladies and gentlemen.
Und mit Zuversicht an. Let's talk to Ollie Crook about what has happened, what will happen, and kind of how we should think about this in the context of the wider European story. Ollie, Merz is now Chancellor. It was a messy start. How does that in any way impact what he does from here? Is he weakened from the get-go?
I think he absolutely is, Guy, and I think that it's fair to call it, a fairly inauspicious start. I mean, in the very first few hours of basically what should have been a rubber stamp transition, basically Friedrich Merz failed where no other chancellor had failed in the sort of modern era of German politics by not garnering the support of all of the lawmakers, or even enough of the lawmakers of his coalition. They obviously went back and they managed to vote again. He was sworn in as chancellor, but I think precisely to your point, Guy, it highlights the fragility that still exists under this sort of coalition government, and we should say, Guy, the whole ambition here was to bring out of existence a very unstable three-way coalition government, which fell prematurely because of all the deadlock and disagreements that there were, into an age of political stability in Germany, and that really did not happen in the first few hours. In the sort of, for Friedrich Merz, after he did get sworn in, he did give us a flavor of kind of how he wants to govern, how he wants to run his government. I'll quote from what he said yesterday. He says, "I just want to govern without pomp and without superfluous she. I say to the colleagues who joined this federal government with me today, who were sworn in today, we must deliver now." So you'll be pleased to hear a she-free government there in Berlin. But the really point that he's trying to make here is that they are going to govern with sobriety, with competence and velocity, something that has basically failed to materialize over the last few years with the last government, and something that the AfD has been exploiting to sort of great fanfare, saying that basically mainstream parties with all these coalitions cannot get anything done in Germany.
OK, excellent. Nice use of language. Now, Merz is meeting Macron and he's meeting Tusk today, so hitting the ground running, I'm sure, will be the narrative. What's going to be on their agenda?
Yeah, so listen, for all the domestic issues that exist within Germany, we won't have to enumerate all of them. We've been talking about them for several years now on Bloomberg Television, on this program and others. The other issue that there has been for Germany is it has not really had a global presence. It did not really have as global a presence under Olaf Scholz. He was not somebody who really liked the limelight, didn't really want to assert Germany sort of on the global stage. There is an opportunity here for Friedrich Merz to change that in a world in which Europe will have to assert itself more. So we sort of look at where he's decided to go in his first few days. It tells you something about the messages he wants to send. He goes to Paris today to meet with Emmanuel Macron. A reset in that relationship is certainly necessary. There was a sort of tension between Macron and Olaf Scholz for the years that they were governing together. He then goes to Warsaw to meet Donald Tusk, an absolutely key ally on a number of issues, but specifically defense. And then he goes directly to Brussels on Friday, where he'll meet Ursula von der Leyen. He'll meet Mark Rutte, the Secretary General of NATO, to discuss defense. And then next week, and this is sort of a key meeting, the EPC meeting, you'll remember that Keir Starmer hosted hosted one of these right after he was elected in the United Kingdom, and it gave him the opportunity. This is the largest sort of European level, leader level format that exists across Europe. So it really gives Friedrich Merz an opportunity to meet with all of these leaders in person and begin to establish these relationships in a world where basically the multilateral order is no longer governed by the United States. Who is going to step up? It's going to be countries like Germany and like France, if they can do so. And we should say, just as a final point, this is a different CDU than Angela Merkel. This is a more right-wing CDU, but Friedrich Merz is somebody who is deeply committed to the European project and knows the importance of a united Europe dealing with the problems that they're facing, from China industrial policy to U.S. foreign policy.
Oliver, thank you very much. Bloomberg's Oliver Crook there. And Chrissy, I know we were both thinking about this yesterday. It seems that Macron and Merz both agree on the need for a European media platform in the face of US tariffs on that particular industry. So there we go, something that they might find it easy to agree on.
I loved Lionel Laurent's kind of piece on this in opinion. He said that Macron wants a Netflix in Paris, not just Emily.
Not just Emily.
And as a key follower of that program, I should say.
Now he's got MEPS in Paris.
Well, he also has to deal with Emily in Rome, which is happening. It's a whole other conversation. Let's talk about the other things we're keeping an eye on, of course. The Papal Conclave begins. If you haven't watched the movie, by the way, highly recommend. It was fabulous. And speaking of the film industry as well, remember those Hollywood tariffs, or at least the conversations with Trump, very much something that might show up in Disney's earnings, at least commentary around that. We're expecting that after the bell today as well, alongside Uber. But then plenty of data in the U.S. from MBA mortgage applications, but ultimately the Fed rate decision and comments from Bessent in Congress. Plenty to digest. Let's see what's on the top of Val's mind. Val.
Hey, we got the Fed decision later. It might be maybe the most boring Fed decision this year.
Don't say that. No, Val. This whole show has been building towards you telling us about the Fed.
You're jinxing it.
But there is no forecast or dot plot at this meeting. The nuance is going to be in the press conference. How does Powell talk about the threshold for the next rate cut from the Federal Reserve? What does he need to see in order to telegraph that the next rate cut might be coming? I think that the current market conclusion is that we need to see weakness in the labor market. We need to see the unemployment rate ticking up before Powell starts talking adamantly about the next rate cut. Because frankly, of recently, he's just been focused on the rise in inflation expectations, the worry that there will be some tariff-induced inflation that will prevent the Fed from cutting immediately, maybe as quickly as the market would want them to.
The thing about it sounds really simple. The Fed's going to cut 3 times this year. Kind of, that's the market. Kind of, we're going to cut 3 times this year.
Well, the dot plot says 2. So.
Okay, so the dot plot says 2. The problem is that at the moment, the kind of the left and the right tails are really big. They're either going to cut hardly at all, or they're going to cut loads. We've just got the kind of we're kind of in the middle, which is a kind of weighted average of both of those two things. How real? Is 2 real, or is none real, or is 5 real? That's the bit that I can't get my head around at the moment, and it feels more extreme than it normally does by quite some considerable margin.
I mean, central bank speak would answer that question by saying uncertainty is high and we don't know and we're on pause until we see further clarity. So I think we're kind of at risk of having a copy-paste kind of answer, from Powell's previous press conferences to questions asked like that. You know, he'll talk about the risk on the horizon. I think one thing that could be interesting is the way that he talks about the first quarter GDP print, which did come in negative. On the hawkish side, he could totally brush it off by saying economic fundamentals are still strong. That was totally distorted by trade data. But on the dovish side, he could maybe paint a more negative picture by saying something like the front running of economic activity in the first quarter could lead to weaker economic activity in later quarters. We kind of seen that said by companies in earnings reports. They did see front running of tariffs, but they expect that to drop off steeply in the quarters to come.
It will be about the narrative he chooses to spin then. Valerie, thank you very much. Valerie Teitel with us to preview, of course, the Fed decision. We'll have more earnings interviews coming up in the Pulse. We'll be speaking with the CFO of Novo Nordisk and the CEO of the French utilities company Veolia. Both of those businesses out with statements this morning. That is it for the opening trade. The Pulse is up next. This is Bloomberg.
top names at the Fed are on Bloomberg.
I'm not going to overreact to any increase in inflation that I think is attributable to the tariffs. But if I see a significant drop in the labor market, then I'd be ready to go. I wouldn't be sitting here waiting to determine whether the inflation is transitory or not. It's time to worry about the real side of the economy. I would expect more rate cuts and sooner once I start seeing some serious deterioration in the labor market.
Nobody covers the Fed like Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily. Every business day at 2 p.m. Eastern, only on Bloomberg.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays at 9 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
Tensions escalate as India carries out retaliatory military strikes deep into Pakistani territory. Pakistan describes it as an act of war. Confirmation of the first trade talks between the U.S. and China and Switzerland this week lift optimism on Wall Street. Plus, the show must go on. Friedrich Merz begins his first foreign trip as German Chancellor after suffering a humiliating defeat in the Bundestag. Now, first thing is first, we also have FOMC, so there's a lot going on. There's a little bit of a risky attitude out there. Now, if you look at U.S. equity futures, actually, they're rising, dollar snapping, 3 days of declines. Again, the planned negotiations or the planned trade negotiations between China and the U.S. seem to be spurring a little bit of optimism that tensions between the world's two largest countries are actually easing. S&P futures getting some 0.6%. Look at Bitcoin. Always good to look at Bitcoin just below that 97,000 mark. The 10-year 43257. And then we'll also look at Brent crude 63.15. Let's also get to the European markets map. Again, quite a lot of earnings. So we have two chief executives on the show, and it really depends on how reliant you are on global trade, whether you have guidance that will support or disappoint investors. Now, the picture compared to the S&P futures is a little bit different because France, the Spain, but also the UK down some 0.4%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. India has conducted military strikes deep inside Pakistani territory, hitting what it describes as terrorist camps. It says the strikes were in retaliation for a militant attack in Karachi last month, in which 26 people were killed, but Pakistan has described it as an act of war.
This has been initiated by India. If India is ready to back down, they have taken the initiative. We have just responded. We have been saying all along in the last fortnight that we'll never initiate anything hostile towards India. But if we are attacked, we'll respond. If India backs down, we will definitely wrap up these things, But as long we are under attack, under fire, we have to respond. We have to defend ourselves.
These actions were measured, non-escalatory, proportionate, and responsible. They focused on dismantling the terrorist infrastructure and disabling terrorists likely to be sent across to India.
Well, Bloomberg's Pakistan Bureau Chief Fuzzy Mangi joins us now. Fuzzy, thank you for joining us. What has been the major developments in the last couple of hours?
Thank you, Francine. So what we've seen in the past few hours, you played a clip of the Indian official as well. Both sides, Pakistan's military spokesman and the Indian Foreign Secretary have come out and they have given some details about what happened during the night. And India has said that they have hit, terror outfit infrastructure. Pakistan denies that and says that 26 civilians have been killed. India doesn't comment on what Pakistan said was that they have shot down 5 fighter jets, 5 planes, including 1 Rafale. And India didn't talk about that in their press conference or briefing. Right now, there are 2 very important meetings going on. Prime Minister Narendra Modi in India and Prime Minister Shehbaz Sharif in Pakistan are both chairing what we would say is, a cabinet security meetings. And possibly, we are expecting for some statements to come out. Prime Minister Sharif is expected to give us a speech to the nation and address to the nation once that meeting is over.
Yeah, Fuzzy, will the conflict escalate further?
The other big sum up from the two press conferences or briefings was that both sides expect something to happen. Pakistan has said that it has the right to respond to the attack, and they will do so at their own time and date. The Indian Foreign Secretary also said the same thing, that they have intelligence of Pakistan planning an attack. So one thing is clear, that what's been done is not over yet, and we're going to see something else happen as well. And yes, that's the latest.
Fuzzy, thank you so much. Fuzzy Mangi there with the very latest on what we're following very closely. Now, China and the U.S. have announced high-level trade talks which will happen in Switzerland later this week, led by the Chinese Vice Premier and the U.S. Treasury Secretary Scott Bessent. He's been calling the current tariffs unsustainable. Meanwhile, President Donald Trump says he would set tariff levels for trading partners.
We're going to sit down and we're going to put very fair numbers down, and we're going to say, here's what this country, what we want, and congratulations, we have a deal. And they'll either say, great, and they'll start shopping, or they'll say, not good, we're not going to do it. And I said, that's okay, you don't have to shop.
Now, for more, let's bring in Roz Matheson, Bloomberg's EMEA News Director. So, Roz, talk to us, good morning, first of all, but talk to us about how important these trade talks are, and are both sides softening?
Well, it's interesting to see that a conversation is actually happening. Just the fact they're going to meet is significant. And at that level of, the U.S. Treasury Secretary Scott Bessent, China Vice President He is going to be there. So this is a high-level conversation, and they're agreeing to meet in person. Expectations for anything tangible will be very, very low. This is not about getting a trade deal, as Scott Bessent said. This is about de-escalation. And so it's a kind of feeling out exercise to have these talks. They'll work out where their parameters are a bit. We're not expecting a massive announcement of a trade deal to come from it, or understandings around tariffs, but just getting in the room is a start. And you can see that that's why you get some relief in financial markets today as a result. So this is not about, again, a big announcement, but it's a bit by bit. So this is the first step. After this, at some point, do we get a phone call directly between the presidents of the US and China? Is that where some of this clarity really starts to come in? It was interesting also to see today China come up with a raft of policy announcements on rates, dropping a bunch of rates, but also looking to push liquidity into the financial markets. And that's to show again that China is working to fortify its economy and to support its markets, and it has the ability to do so. And that's a bit of a signal also to the US going into these talks. So even though they want to have the conversation, that China is not going to move away from taking quite a hard line.
What about Ross negotiations with other countries?
Well, it's interesting to see. Obviously, we had Donald Trump's comments overnight saying basically, we'll set some numbers for you and present them to you. And is that the extent of a negotiation? But we do know from our own reporting that US officials and UK officials are locked in very, very intense conversations to try and get towards some sort of framework understanding. That's for the UK to seek relief, obviously, from tariffs on autos, on steel. And also the UK is very worried, obviously, about pharmaceutical and now about the film industry in the UK as well. And so we know that there are conversations happening as we speak between those officials to try and get towards some sort of framework understanding. We also know, of course, that the new Canadian Prime Minister, Mark Carney, met yesterday with Donald Trump to have that kind of, again, setting of parameters, frameworks, understandings, conversations. I mean, there was no tangibles from that. Donald Trump didn't give ground on tariffs to Canada, but it's how are we going to have these conversations going forward? What are the boundaries going to be, and what are the red lines for each of that? So it's interesting to see that process happening across the board, be it Canada, China, or elsewhere.
Roz, thank you so much. Bloomberg's EMEA News Director, Roz Matheson. Now, Novo Nordisk, one of the big gainers in Europe this morning, despite trimming its forecast. That's as sales of the Danish pharmaceutical giant's blockbuster obesity and diabetes medicine struggle with competition from the U.S. Well, I'm delighted now to be joined by Karsten Munch-Knudsen, the Chief Financial Officer of Novo Nordisk. Thank you so much, as always, sir, for joining us. So what portion of your sales do you think will be affected by Donald Trump's tariffs to branded pharmaceuticals produced in the EU, and how long will it take for you to reshuffle your manufacturing?
Well, so first of all, at this point in time, then we don't know exactly how potential tariffs are going to play out. We have a significant footprint in the U.S. already. So in totality, we have more than 10,000 employees in the U.S. spread between manufacturing, R&D, and commercial. So let's see how it works out. But I would say out of total volumes, as a matter of fact, we're actually exporting more out of the U.S. than we're importing. And as a case in point, then the product we just submitted here in the first quarter called Oral CMO Obesity, which we submitted to the FDA for potential launch in the U.S. early next year, that is produced in the U.S. by American employees to be sold in the U.S. So a purely U.S. to U.S. supply chain. So let's see how it works out.
Sir, do you see actually rising demand for some of the contract manufacturing, for example, at your Catalent site in the U.S. from customers looking to bring more manufacturing to the U.S.?
Well, so Novo Nordisk as a company, we are not in the contract manufacturing business. We acquired 3 fill finish sites with the intention to use them, of course, adhering to the historic CMO agreements. So we are not really having our ears to the ground on the CMO side. We are buying for some of our pipeline products, but our main principle is to produce for our own needs.
Okay, will you seek more exclusive access, for example, deals like for Wegovy, like the one agreed with CVS last week? Are we going to see more of those kind of deals?
I would say our approach is really that we pursue open access in order for patients and prescribers to have free choice to choose the medication they believe serves their needs best. So we're not pursuing exclusive contracts, and of course recognize that it's a PBM choice, how they design their formularies, and then we're only happy that they decided to choose Wegovy for the CVS formulary based on the benefits of Wegovy. And then another part of the deal is that it actually provides access for Wegovy in the cash channel for patients to go to 9,000 CVS pharmacies to pick up Wegovy through a cash offering at $4.99.
Mm-hmm. What's the reason behind wholesaler destocking of Wegovy in the first quarter?
Well, I would say it's normal fluctuations where the wholesalers, they have certain algorithms, and the script numbers have been somewhat flattish in the first quarter, and I believe as a consequence, after coming out of a shortage around the turn of the year, then the algorithms are adjusting. So it's not a major change, to be honest.
Could I ask you how you see competition on prices actually affect market share in obesity this year?
Absolutely. So the key backdrop on obesity is that this is a market development strategy. So right now, if you take it in the U.S., then we're only looking at a few million patients being served by the industry in the U.S. on branded pharmaceuticals for treatment of obesity, out of a total potential of 110 million. So this is a market built, and as a consequence,
EDP's 5G Living Lab is transforming a 70-year-old dam into a digital innovation hub.
Vodafone Business has deployed 5G infrastructure to transform the way we do things better, faster, more efficiently.
Our special coverage here at Bloomberg continues from the 28th Annual Milken Institute Global Conference in beautiful Beverly Hills, California. I'm Romaine Bostick. Carol Massar will be joining me in just a bit. A mashup, once again, of two of your favorite programs, The Close and Bloomberg Business Week. We've got a lot to cover today with the biggest names in finance walking around the Beverly Hilton today. Over the next 3 hours, we're going to cover everything from private markets to public markets to venture capital and everything in between. Dana Settle, Graycroft co-founder and managing partner, will be here to talk about the future of AI and specifically where the investments are in the VC space. We're also going to get a read of what's going on in Washington from the director of the U.S. Congressional Budget Office, Philip Swagel. He'll discuss that latest skinny budget out of the president and, well, that huge debt servicing load that investors are wringing their hands about. And Andy Sullivan, the newly appointed CEO of Prudential Financial, he'll be joining us in just a little bit here on the program. A lot to talk about here as we get the intersection of the economy, of what's going on in Washington, and of course, what's going on in financial markets. Financial markets that in many ways have now blended together. A lot of people have mused that private markets to a certain extent have actually become the new public markets. And while that might be overstating it just a bit, the Venn diagram definitely shows a degree of increasing overlap. So who better to kick things off today than with Man Group, the world's largest listed hedge fund company with about $170 billion in assets spanning both public and private markets, a mix of long-only and alternative approaches across all major asset classes. And now that I've pumped you up, pleased to say that the person at the center of all that joins us right now, Robin Grew, who helps lead the Man Group. Great to see you here on the Milken stage in LA.
Thanks for having me.
Volatility in this market. If you're a broker-dealer, probably good for you. If you're a hedge fund manager, not so much.
Well, listen, volatility is a place where we need to lean in to do more. We are in volatile markets. We're not going back to a benign market environment. And so in that space, we have to be prepared to create diversified content and capability that's able to navigate these markets to provide outsized returns or alpha returns to our investors.
How do you do that, though? Because when you look at the strategies that Man Group has, a lot of systematic strategies, a lot of trend-following strategies that we've seen over the last few weeks and months does not necessarily perform optimally when there is so much misdirection going on in the market.
Totally. And they're not supposed to. I think that's the thing that we need to be mindful of. In a diversified portfolio, you're going to have assets and capabilities and strategies that do perform. And we've seen that in credit, both public and private. We've seen it in great active equity management. We've seen it in multi-strat. But you don't see it in trend because that whipsawing, whiplashing behavior doesn't work for it. But that's why when clients are talking to us about how do they position their portfolios, they're looking at the things that will operate in markets as we're seeing today. And they're also thinking about defensive alpha. And what we do know, and what we've had history around, is that when you have decades of experience in momentum and trend strategies, they operate well when this volatility slows down, and then you can find the trends again.
Do you expect that volatility to slow down anytime soon?
I think that volatility is going to be here for some time. It's whether the volatility is accompanied by whiplash behavior. And that's what the markets are looking for. We're looking for that consistency, something that is predictable and capable of being predicted. But there's no doubt that the opportunity set across markets, across jurisdictions, are really interesting right now. 100 days ago, you might not have thought about Europe as a growth opportunity. Today, we sit here talking about that. We're looking at Asia with a very different set of lenses. We're seeing real opportunities for active and alternative investments. And it's about staying calm through this time as well. But volatility, will it be here for some time? I think so. Dispersion? Yep, I think so. But whiplash? Let's hope not forever.
I don't know if you got a chance to hear what Scott Besson had to say a little bit earlier at one of the Milken panels here. But there was a really interesting moment in that where he really turned to the audience and looked straight at them and said, we're trying to make everything more appealing for you, meaning for the investors out there that are in this room. Do you find any comfort in hearing those words out of Scott Bessent?
Absolutely. We want this biggest, deepest capital market to function really, really well. We just also are put to work by our clients to go and seek out alpha wherever that may be, that outperformance across all markets. That's why we trade 800 plus markets in the world. That's our job to do that. And we do that for real individuals who have saved all their lives, who have put into their pension pots, be it their 401ks or their IRAs or the equivalents elsewhere in the world. But yes, I think it's a tremendous statement that we have Scott Bessent talking to us about actually being supportive of markets. I think that's a great thing.
Is that too little too late? This is a room full of people from around the world. And there's been a reallocation of capital, or at least a rethink of whether to reallocate capital away from the U.S. to Europe, for example, or even to other parts of the world.
Too little, too late? I don't think so. I think we all look to the quality of the US as an investable space. And again, it's the opportunity set that's out there. Is it a bad thing that there's competition? Is this a bad thing that there's growth in Europe or an opportunity set in Asia that's opening up? I don't think so. In the same way as I don't think it's a bad thing that we're seeing the opportunities in private credit open up. So I think there's plenty for us to keep our very detailed focus on. But no, I don't think it's too little too late.
How do you keep your team, the folks who work under you, not just motivated, but to get them to understand what the long-term goal is in an environment where we are so focused on these minute-by-minute, short-term disruptions?
It's a great question. I think the reality is you have to have confidence in the strategies you're running. And you have to know that those strategies are performing the way they should do in the market environments you're in. So you keep that focus. At Man Group, if we have strategies that aren't working in a period of time, I don't have to go onto the floor and make people feel more unhappy. They're doing that themselves. So for what we do, it's about being sure that we're doing the best we can do. We continue to be at the cutting edge, entrepreneurially, of content and product and capability, that we deliver that to our clients, that we deliver more than just funds or products even to clients, that we're delivering the decades of experience we have in AI or technology, or we're delivering the nearly 20 years of experience we have in our partnership with the Oxford Mann Institute at Oxford University. It's about keeping people focused on the day job. It's about staying calm.
You mentioned AI, and of course, Man Group was probably one of the early adopters, at least in the finance space, of AI. And I think we spoke about this at Bloomberg Invest a few months ago. Does that become more critical in times like this, having those types of capabilities, or is it potentially a liability? Because you're effectively talking about, something that's, I don't want to say it's predetermined, but certainly there's a roadmap that's put out when it comes to these models.
Listen, I think AI is a tool. We talked about it before. It is a great capability. When I think about generative AI, when I think about AI agents, it's about deploying those. It means we can be better, faster, smarter. It doesn't replace the human being, and it doesn't mean that you need to ignore the risks that are incumbent in these capabilities too. But I think that tech is part and parcel of what the future looks like. Undoubtedly. AI part of that? Undoubtedly. You don't have to look very far in this conference or the meetings we had with Elon Musk yesterday to see just the power and the capability of these future technologies.
And you think the investment in that writ large, not just at Man Group, investment in that AI tech, that hasn't been disrupted at all? There hasn't been a rethink on that longer-term investment opportunity?
Not for us. We continue to think that AI, and we continue to think that this is both being consumed within Man Group and within the work that we do, but the broader reach out into other industries and other spaces is going to be, I think, transformational.
You've been on the job for a while now, so you're not new, you're more of a veteran now. And you're a veteran at a time where this has to be one of the more challenging times to be a corporate leader, certainly of a financial company. And I am curious as to what you want to do to grow Man Group, knowing that the world order that you came into, if not over, is certainly being reshaped.
I think listen, it's a privilege to sit in the seats we do. And I've been talking to clients non-stop, really, for the last 100 days or so. And that privilege is something we shouldn't forget. Mm-hmm. You get a front row seat into what's happening in the world doing the jobs we do. And so my job, how has it changed in the last 100 days? It hasn't really. It's still about doing the right thing by clients. It's still about sticking to the strategy we have. It's still about creating diversified, orthogonal, uncorrelated content so our clients can benefit and can return value to their underlying savers and pensions.
All right, Robin, well, we'll let you get to it. I know you got a busy couple of days here at Milken. It's Robin Grew, the CEO of the Man Group, live at the Milken stage right here in the lobby of the Beverly Hilton, the 28th annual Milken Global Conference. And it is already off to a great start. You heard Robin, guys, talk a little bit about that panel that Elon Musk did yesterday. That was on Sunday. Probably one of the most attended panels, probably only second to Scott Bessent this morning. These are the people everybody wants to hear from. They want to hear about the folks dominating in the AI space. They want to hear about the folks in Washington making those big investment decisions. And those folks, we're all going to be walking across the stage a little bit later today. Romain Bostic here. Carol Massa will be joining me in just a bit as we continue our coverage here from the Milken Global stage. Let's get a quick check of what's going on in financial markets here on this Monday afternoon. Financial markets that continue to look for a degree of direction coming off what had been a phenomenal 9-day rally in the S&P 500, the benchmark U.S. index, reclawing all of those losses from that big shock back at the beginning of April, that Liberation Day announcement when it comes to trade and tariffs. And that has really been all of the talk over the last a few hours here this morning, whether it's what we heard out of Scott Bessent, whether what we heard out of Carlyle CEO Harvey Schwartz, or what we heard out of Prudential's Andy Sullivan a little bit earlier on the Milken stage. The idea that all of them are focused not just on what's coming out of Washington, but of course technology as well. The investments in that technology, whether it's for their own personal benefit or, of course, the benefit of their investors. And that is where we want to take the show next year and talk a little bit more about that global race for artificial intelligence dominance. Artificial intelligence dominance that has been compared to some degree to the Manhattan Project. And as China, of course, makes strides out there, the U.S. is really trying to seek ways to accelerate its progress with new initiatives to boost education, to boost workforce training, and to boost investment in AI and related technology fields. The President of the United States signing an executive order on that just a few days ago. And the point person behind implementing those initiatives is Michael Kratsius. He's the new director of the White House Office of Science and Technology Policy. And prior to that, prior to joining the government, Kratsios was a principal at Teal Capital and ran strategy for startup Scale AI. Great to see you, Michael.
Great to be here.
I think everybody wants to talk to you. You are, to a certain extent, at least for the folks in this room, the man driving a lot of potential investment opportunities. And what everybody wants to know, is the U.S. going to maintain its lead when it comes to being a technological leader?
Yes, it's something that the president is very focused on and something we as administration are committed to ensuring, as the president says, unquestioned and unchallenged global technological dominance. And that's going to require a lot of work from us, from R&D to dereg to adoption. So there's a ton we're working on. And as you just mentioned, the president signed an executive order just a couple weeks ago to make sure that our K through 12 education system is geared to prepare our students for this AI future.
What's the runway for that? Because there's been a lot of talk about how much brain power, if you will, already exists, meaning so for the adults out there, and how many people we need to sort of train up, meaning the next generation of folks, to ensure that we have enough skilled people to take this forward.
Yeah, so I think the president realized that it's critically important that we prepare the next generation of Americans to wield and utilize these tools. So we began with this executive order on artificial intelligence in K through 12, and essentially it's doing three things. I think the first thing and the most important thing is bringing together public-private partnerships to support AI education. It's something that we cannot do alone. We have great industry partners that care about helping here. We have great folks in philanthropy, great folks in government, and the K through 12 system itself. So that's what the first thing the executive order does. The second, which is really exciting, is a presidential AI challenge. So we want to create in a sense, an Intel Science Fair or like a DOE Science Bowl, sort of premier competition for AI that was going to ultimately end up in a event at the White House next year.
Yeah.
And lastly, you said we have to train Americans, reskill them, and retrain them with the AI tools that they need to succeed in this economy. And we're working very closely with the Department of Labor to make that happen.
And just to be clear, so the president understands that and understands the importance of a government role in facilitating this, because when a lot of people talk about our leadership in the United States from a technological standpoint, they point back to a lot of those post-World War II programs that came out of the Defense Department and DARPA and other sort of government research facilities that fed into university research facilities and ultimately into the private sector. Is that the playbook?
Yeah, so what's very unique about the American innovation ecosystem is it's really three parts. It's one part academia, one part private sector, and one part government. And all of them kind of pass the torch from one another to drive innovation. So the federal government often funds early stage, basic, pre-competitive research. Universities make fundamental breakthroughs or discoveries. Those are ultimately taken up by the private sector and commercialized, and the government steps in to help create a regulatory environment for those new technologies to succeed and thrive. So we're going to continue to work on that effort and make sure that we have the best functioning innovation ecosystem in the world.
What needs to be changed when it comes to the regulatory environment? You've been on the record in the past saying that you thought that things were, there were too many barriers, if you will. What's on the agenda right now that this administration wants to do to lower or at least smooth out those regulations?
We really have to find and identify barriers which are inhibiting the proliferation of emerging technologies. We want to be flying supersonic again. We want commercial drone deliveries to be happening in the United States. We want self-driving vehicles on the road. We want AI-powered medical diagnostics. All of these things have been slowed down or hampered by a regulatory process which may be good intention, but it's just too slow. And we need to continue to lead the world on this, and doing this deregulation is a big piece of the Trump agenda.
Do you see us primarily in competition with China on that front?
Look, I mean, we're in competition with so many people around the world. Everyone wants to be a leader here, and obviously the PRC has made it very clear that they want to lead the world by 2030. Mm-hmm. The U.S. is in a very lucky position where we are the world leaders, so we need to continue to make sure we have an environment where we can maintain that leadership.
And university is going to be a critical part of that. Are they not? There's been a lot of discussions about the president's attacks on certain universities, about some of the brain drain that maybe we might see as a result of that. How do you reconcile that?
The most important thing about federally funded R&D we have to think about is it's not about spending a lot of money. If you spend a lot of money on the wrong things, it's worse than spending a little money on the right things. Mm-hmm. So we're making sure that the biggest priorities for the nation, things like leading in artificial intelligence, leading in quantum information science, that we continue to fund those areas and make sure that our universities are a big part of that agenda.
Tariffs. I have to ask you about tariffs. Your president has made it clear he's tariff man. They're here. They're coming. Does that have an impact, though, on what you're trying to do? Do you have to factor in maybe the extra costs to whether bring things in or reshore things?
What we're seeing is some of the greatest technology companies in America and around the world are coming and they're investing in the United States. As Secretary Besson said this morning, more investment has come into the United States in the last 100 days than it has in the 4 years under President Biden. So what we're doing is actually bringing these new technologies here in the U.S. You saw the TSMC announcement that's happening in Arizona, where we're going to be building leading-edge fabs here in the United States, and so many more great investments. So I think we're in a pathway to really make sure that we have the tools that we need to keep driving this AI leadership position.
When you think about investments in the United States, can that be purely bilateral, meaning we come from this sort of multilateral world when it comes to trade and investment opportunities, and the president's clearly pushing us to much more of a bilateral type of deals. Do you think that can facilitate the same pace of innovation that we saw back in the 60s, 70s, and 80s?
I really do. And I think that the proof is in the companies that have already made big announcements about coming here in the United States, and there's a lot more of it are probably going to be announced in the weeks ahead. So we've seen an environment where everyone wants to invest and work here in the United States, and predominantly in these cutting-edge emerging technologies that we're focused on. So I think the future is very bright, and we have an economic environment which is really going to be fostering breakthroughs here in America.
All right, Michael, really appreciate you being here. Obviously a busy guy. Michael Kratsios is the White House Office of Science and Technology Policy Director. Toss it back to you in New York, Bonnie.
Fantastic stuff, Romaine. I just want to update you on market action now. We are improving as we go out this session. We right now have the Dow Jones Industrial Average actually in the green, up by about 0.3%. The S&P, though, still down about 0.1%. The Nasdaq 100 down a little fraction more than that, just about 20,073 right now. So about half stocks higher, half the stocks are lower. And in the SOX index, you're looking at about 12 stocks that are still higher. But it's a very unsure session. We have the curve steepening a little bit as well, with the 10-year yield up more than 5 basis points at 4.36. And we have the 2-year yield up 2 basis points. So a little money flowing out of treasuries, flowing out of crude oil as well, down another $1 now at 57.27 after OPEC Plus decided on upping production levels at an emergency, basically, weekend meeting, or a meeting that was brought forward. Gold also continuing to rise now again at 33.18. That's up 2.4%, Romaine.
All right, thanks, Bonnie. And meanwhile, back here in Beverly Hills at the Hilton, the site of the Milken Global Institute Conference, pleased to say joining us right now is Kristen Roth de Clark to talk a little bit here about what's going on in M&A. Kristen, great to see you.
Nice to see you too.
We talk about this idea of, I think, some bullishness coming into 2025. And I know over the last few days, 100 days, if you will, maybe that got disrupted. Do you see hope that some of the most bullish outlooks that we saw for M&A coming into 2025 will still come to fruition?
I do. We have seen a return of mega cap M&A in tech. While the number of deals are down about 20% year to date, year over year, the volume is up 40%. And so we've seen multiple deals over $20 billion, multiple deals over $10 billion, driven by strategics, driven by divestitures. Private equities playing a major part of that.
What pocket, though, of tech is that? Is that all just sort of weighted to AI, or is it a little bit more diversified?
It's been a lot in security, in payments, fraud, and some semis, as long as it's not they have risks around competition and regulatory. Those are the main sectors, and then obviously AI as well.
There's been a lot of talk, particularly when it comes to privately held companies, the path to an IPO or some type of exit to public markets. With regards to technology companies, do they have an advantage in this environment where people are so much more scrutinous of what they're willing to buy or what they're willing to bring to market? Is AI and technology, cybersecurity, do those things have an advantage over other sectors?
In terms of the IPO market, we still need to see some stability in the broader volatility in the VIX and in some of the messaging coming out around tariffs. I think just broader stability will help give us an opportunity to take some of these companies public. I would say what we are seeing more activity on is take privates. So some of the companies that went public in 2020 and 2021 in particular are pretty nice targets for a number of the private equity firms. And we're seeing reasonable valuations in some of these deals for really high-quality assets.
Where's that money coming from? Is that cash, or are they having to finance that?
Both, but primarily financing. And the financing environment still continues to be pretty strong, both on the broadly syndicated side and also from private credit.
Mm-hmm. Are you concerned about where interest rates are now and where they might potentially go?
I think, if anything, it just creates some volatility in the market, which makes it harder to do as many, deals. But I think that, especially on the IPO side, but less. I think it's day by day at this point.
In your world, though, when we see this volatility, does that create sort of stasis, or is it more just maybe a bit of a retrenchment? Let's rethink, and then the activity increases.
Yeah, well, actually, we saw the market kind of trade off for some of the companies in tech that are more likely to be impacted by tariffs, like the semiconductor stocks, for example, in April, come off 20-25%, and those have mostly rebounded now down kind of 2 to 5%. So I think it does create some opportunity. It also creates opportunity for take privates from private equity if we do have blips for people to focus more on that. And we're active. We're third in M&A league tables year to date on announced volume. Yeah. And so this is where we're spending a ton of time.
What is that ecosystem like right now? Because when I look at these deals now, you still have the big institutional players still involved, but you'll also have private credit. You'll maybe even have private equity involved in there, and then you sprinkle in a little bit else from the investment world. Is that kind of I don't want to say a template, but is that kind of the norm now that you have to have all of these players involved to get a deal done?
I don't think you have to have all of those players involved. I think the reality is there are options, and you can have a little bit of financing from the banks, and then also couple that with private credit. And I do believe we'll continue to see that persist.
What's the outlook for cross-border deals, given the political environment here in the U.S.? Are there opportunities there?
There are opportunities, but they're on the sidelines right now, waiting for some more clarity around some of these geopolitical issues and tariffs. But there's great opportunities from a synergy standpoint, and it just all hinges on the ability to do them from regulatory.
And the regulatory environment, is that supportive of those types of strategic and synergistic transactions?
Not currently, as much as, that is a huge opportunity once we have a little bit more certainty, but it is not where we're seeing a bulk of the volume currently.
I'm curious, Kristen, just about the environment here in this room. And there's a lot of optimism. I've only been here for a day and a half, but there's a lot of optimism, which is a kind of a switch from what we saw last year and certainly the year before. Are you seeing that as well?
Well, Q1 was a great quarter, right? So that was helpful. I think the question and what we're spending most of the time with our clients is, what does it mean for the rest of the year? Some of our companies are diversifying supply chains or moving their supply chains, and actually, in some cases, consolidating vendors for a short period of time to expand in areas that may have an easier tariff policy going forward. So we're spending time with companies on that. We're spending time with companies on what is the outlook for enterprise software and our sales cycles elongating at all. We haven't seen that yet. So we're seeing still pretty positive consumer sentiment, enterprise sentiment, and the ability to pivot for some of the companies that are impacted by tariffs or could be impacted by tariffs.
All right, Kristen, I think we have to leave it there. Kristen Roth-Clark, great to see you here.
Great to see you too.
Over at Barclays, who of course runs the global head of tech investment banking at Barclays. A lot more coverage coming up right here on the Milken stage from the Beverly Hilton. A discussion on the current geopolitical climate as the trade wars heat up. John Clifton, the CEO of Gallup, is going to be joining the big program in just a second. And so too, I'm told, is Carol Massar. We got her out of bed. She'll be on stage with me in just a bit. Don't go anywhere. Our special coverage from the Milken Global Investment Conference continues in just a moment. What's your line, Carol Massar?
Hello.
Hello.
I decided to show up. It's been super busy, as you know.
Let's restart the show from the top, because Carol missed it here. We are live right here at the Milken Global Investment Conference. You're familiar with this, Carol, right here in the lobby of the Beverly Hilton.
The energy is unbelievable. I am Carol Massar along with Romaine Bostic, and there's a lot going on. We're going to have three great conversations. And first of all, we want to start with a little bit about some of what America and how they feel about different things. So let me lay it out for you. 3 months into President Trump's second term, more Americans attribute current U.S. economic conditions to him rather than his predecessor, Joe Biden, while a considerable portion think responsibility is still shared between the two. Meantime, one more stat I want to throw out at you. Americans are widely skeptical about the benefits of the recent tariffs that the Trump administration has imposed on the United States trading partners, with majorities believing they will ultimately cost the U.S. more money than they generate in the short term as well as the long run. So joining us to talk about this, because this is their data, we're talking about the Gallup organization. We want to get into a lot about geopolitics, impact to markets, and really the workforce as well. Is the CEO of the global analytics and advisory firm Gallup. We're talking about John Clifton. He's also the author of Blind Spot, The Global Rise of Unhappiness and How Leaders Missed It, which I love because I think it plays into so much that is going on. John, how are you?
I'm great. Thank you for having me here today.
Well, tell us about the environment, because you guys are constantly getting checks on how Americans feel about a lot of important issues. How would you describe some of the data flow that's been coming in?
Yeah, well, I think what you opened with is there are a lot of Americans right now that are concerned about things like increases in tariffs. And there is one thing for sure, they're really concerned about the economy. And so we've even looked over the past 6 months, there's been a reversal among Americans in terms of where they think things are going with the stock market, with the economy, a lot of those indicators. But I think one of the things that's most important to watch for all politicians is how people feel about their own lives. And that's been a real challenge for many years now that we've been looking at in our data.
You know, it's really interesting. Before U.S. Treasury Secretary Bessent spoke this morning, I can't remember whether it was Michael Milken or somebody else, but basically talked about people are so angry. They're not happy. And I think a lot of it has to be that they feel left out of the economy or any success. That sounds like this is a part of it.
100%. Now, it also turns on what's the definition of happiness, because we measure a number of those different sentiments. But one that's really concerning is when we ask people about the satisfaction with their lives, the percent that say that they are very satisfied has been declining for many years now. And so I think this sort of pent-up frustration that now we see that's being expressed against, almost every single institution in the United States comes with good reason, because people don't feel like their lives are progressing in the right direction.
Well, it's interesting you say that, because a lot of people say that some recent elections, not only here in the U.S., but globally, have been decided to a certain extent off of that sentiment. But you guys also have put out a State of the Workplace report, which kind of addresses this idea of lower worker engagement, lower productivity, and I wonder if that's connected to that as well.
Well, before we get to that, because you're pointing about how does this track with elections? I mean, we've all heard the famous quote that comes from James Carville originally when he says, well, it's the economy, stupid. I would adjust it just a little bit. It's how people's lives are going, stupid. And so I think it's one of the reasons that a lot of times politicians aren't necessarily tracking to see how do people feel about their own lives and what are the drivers of that.
You brought that up. So I covered the campaign, the most recent presidential campaign. One of the candidates, who was not Donald Trump, so you can do process of elimination, was criticized pretty heavily for not necessarily understanding what people were going through. She had great proposals. She was talking to these people, but there was this perception that she, and not just her, other politicians, did not really have a fundamental understanding. How do they get that understanding when a lot of them don't live those lives that those people live?
Well, one is to ask people and listen. Yeah. And so one of the things that we ask every single year, and actually we do it very regularly, is what is the single biggest issue that's facing Americans today, that's facing the country? And the two issues that Americans were most concerned about in the lead up to the election was illegal immigration and, of course, inflation / the economy. Now, here's what's most interesting. And of course, when we wrote about this, we kind of buried it halfway through. Maybe that's natural Gallup style. But that item, when you ask people what's the biggest issue and what actual party do you think is best at resolving it, it has never been wrong except for one time in predicting the outcome of the elections. So to your point, being in touch with what it is that's concerning Americans is something that actually is a leading indicator for how the election will turn out.
How do we figure that out? Especially since I think many would argue there's so much money in politics that mostly our leaders, all they care about is getting reelected. And so are they really listening to their constituents, or are they just thinking about what gets them back in office?
Well, when you said, how do we figure that out? I mean, one of the things, as I mentioned earlier, is to ask them. Now, again, George Gallup, I think this is something really profound that came from him. He one time said, look, when we're doing surveys, what we're suggesting is not do what the polls say. What we're suggesting is you need to know what people are thinking, because leadership is also about doing what's right. And it's not necessarily doing what's most popular. But again, no matter what it is that you're doing, you must be in touch with whatever the sentiment is among Americans or whatever your electorate is.
John, it seems so basic. And I also want to bring in that I think we went through an election where the polls were wrong. So are we polling? Like, how do we make sure we poll correctly? I mean, we all laugh about it. It's maybe not funny, but I don't know that I've ever been polled. I don't know if you've ever been polled.
No, I hang up on those people.
No surprise. But I do wonder, how do we make sure we're doing it correctly in terms of the methodology?
It's very difficult. But, George Gallup was actually asked this question once, and a woman stood up and asked and said, if you call so many people, why is it that I've never been called? And he said back to her, well, actually, the statistical chance of you being called is the same as you being struck by lightning. And she said back to him, well, that's funny because I have been struck by lightning. But the point is that, when you're doing probability-based sampling, and we have 330 million Americans in this particular country, and, just roughly 2/3 of them are adults, the statistical chances of being selected are very rare. but it doesn't change the fact that as long as you're using probability-based sampling, you will get a representative sample of Americans.
I'm curious, though. I mean, obviously a lot of your polling, at least the polling most people know about, is the stuff that you do with regular Joes, if you will, Joes and Jills. What about in the corporate world and business leaders and how they're feeling right now?
So we do a study in 140 countries every single year to ask people about their well-being at life. We ask them about their engagement at work. And we're uncovering really concerning trends where we see that there is a 2-point decline globally in people who have this emotional attachment to work. And here in the United States, we saw for a while, over a decade, there was a 6-point increase in engagement. But most recently, all of those gains have been eviscerated. And so why should this concern executives? Because when people don't have that same kind of emotional attachment or energy at work, what does it do? It changes productivity. It also changes the work product. And so we can see that 2-point decline globally has wiped off $500 billion off organizations' balance sheets in lost productivity. In fact, if you fully optimized workplaces based on this concept of employee engagement, you would actually see a $9 trillion increase in the world's GDP.
It's super interesting. Just coming off a real estate panel on the importance of community, and I think that's also true in the workplace, that people need to feel like they're engaged. John Clifton, thank you so much. Really appreciate it.
Thank you for having me.
Of Gallup. All right, folks, let's send it back to our New York studios and Bonnie Quinn for a quick check on the trade.
Carol, thank you so much. Well, we are green in the Dow Jones Industrial Average. We have been for most of the day and improving for the other major averages. So if you look at the S&P 500 right now, we are just down fractionally, less than 0.1%. We may even make it into the green by the close. The Dow, again, up 0.25%. This after we got some services data this morning, which showed a pickup in services growth at services providers, and that's helping some stocks higher, including EQT, which is the best performer in the Dow, also the likes of Ralph Lauren. If you look at the Nasdaq 100 and the Nasdaq, they're both lower as we await any more news on trade deals. But again, fractionally lower. We started the day much worse off than we are now. Some of the outlying movers you see in things like crude oil, for example, WTI crude, down now to $57.11 a barrel after the OPEC Plus news over the weekend. We also have the dollar much weaker against the Japanese yen, the yen trading at 144.12 per dollar. And then some of the other assets that we like to keep an eye on, gold, for example, it's at 33.20 now, up about 2.5%. So sentiment a little bit all over the place. Now let's get back to the Milken Institute Global Conference and Carolyn Romaine. Carol.
All right, Bonnie, thank you so much. Well, Perplexity, it's a company that's been getting so much attention, some good, some not so good in the past
I use
year.
it, by the way.
You do?
I do, yeah.
Then it must be interesting and good. All right, so the company was started, just a little bit of background, by a scientist at OpenAI, a quant trader, a co-founder of Databricks, and also a Facebook AI researcher. That was back in 2022. They built the platform as an AI-powered search tool designed to compete with Google. Now, the startup, I should point out, attracted a lot of early investments from NVIDIA, also a Meta chief scientist, AI scientist. And then in March, Bloomberg included the company and its founders in a story on the new, basically, AI boom billionaire. So we're delighted to have with us Dmitry Shevelenko. He is the Chief Business Officer of Perplexity, the AI-powered search engine and startup. How are you?
I'm doing great. Thanks so much for having us, and thank you for being a user of Perplexity. We hope it saved you a lot of time and let you ask some really fun questions.
It has. I'm still going to ask you tough questions.
Okay, all right. Well, I'll use Perplexity to answer it, so we're good.
How many people are using it?
So every day we answer around 25 million questions. So it is incredible just to think about all the impact, and that's growing, every week, every quarter, and that's our simple goal: answer more questions tomorrow than we did today, and have that go on forever.
Wait, so say the number again. How much?
25 million questions a day.
Okay, what's the pace of growth?
We don't disclose it publicly, but we're very excited with the growth.
And do you hold on to people like Romaine once you get them?
We see, actually, compared to other generative AI products, industry-leading retention. Perplexity, it engenders a very loyal use. It is for people that value their time, that want to get the best answer, that want answers grounded in high-quality sources.
Just playing to you, you know that. Just playing to Romaine.
Well, how do you, though, ensure that? I mean, we've gotten to this point where sort of the first phase of wherever this is going has already occurred. What's next? It's not just about collecting more data, is it?
I think we want to turn these really useful tools into the best executive personal assistant you've ever had. And so a big part of where Perplexity going is becoming more personalized, linking up to the other services you use. So we don't only answer your questions, we anticipate the questions you're going to have, the problems you're going to have, and solve them for you. In some ways, we want to be answering fewer questions in the future because we want to solve the problem before you even need to ask us to do it.
So this gets to a point where we talk about what AI becomes, at least the consumer-facing part of it, whether it becomes search, whether it becomes something deeper to that. I bring that up because this is at the core of that antitrust case with Google. You testified in that case, and there was a lot of discussion from you as well as other folks in this industry that there was a roadblock put up by Google when they saw Perplexities and others coming down the pike. Do you think that threat is going to be removed as a result of this case?
I think consumers benefit from choice, and particularly when it comes to the Android ecosystem and our mobile phones, Google has abused their monopoly and restricted consumer choice. We know that when people get access to Perplexity's Assistant on Android devices, they prefer it to the Gemini and Google Assistant. And, that's not, we want to compete with Google on the merits of who builds the best product for the users, not who already has the locked-in distribution. And I think just the fact that this case has been brought has already opened up the ecosystem. We're able to work with OEMs like Motorola. We announced a partnership with them. That would not have been possible if Google were already not under a lot of pressure. But ultimately, we're advocating for choice for consumers.
So does the outcome of this case matter that much to you? If you're getting business as a result of this antitrust case, if the remedy is just, spin off the Chrome browser or something of that nature, does that actually help you in any way?
The reality is the industry we're in is accelerating at such a fast pace and moving at such a pace that we can't wait for these remedies, right? We need to, it's helpful because it's putting pressure on Google. It's making carriers and OEMs feel like there's less retaliatory risk to partnering with a company like Perplexity. Right. But our plan does not assume something's going to happen with this case.
Are you a search engine? Do you consider that? Because that's been the crux of this case, defining what Google really is, defining what Perplexity really is.
We are an answer machine, which you could consider a type of search engine. We think it's a lot better than a search engine because we take it a step further and we save you even more time. But we're definitely competing against Google. That is without a doubt.
So you're competing. I think it was The Verge who kind of said, well, based on your testimony, that you would maybe be interested in buying Chrome. Is that real? Is that valid?
I think it is really important that Chromium, which is the open source part of Chrome, continues to have a good steward because all the other browser competitors are based on Chromium too. And so a really bad scenario is that Google sells Chrome to a company that does not support Chromium, and then you have even less choice in the market.
Because you're building a browser based on Chromium?
On Chromium.
Okay.
Yeah. So we selfishly want Chromium to exist, but Edge, other browsers are also Chromium based, and so it is important that that the core technology persists.
So what happens if Chrome does end up with the owner who doesn't have the same commitment? Do you just completely retool Comet into something else, or?
Yeah, I mean,
are you starting from scratch?
Yeah, I mean, we're competent. We're fortunate to have one of the most competent engineering teams assembled in the world, so we can adjust to any changing technology landscape. But it would generally be better if Chromium continues to be a strong open source alternative.
All right, Chrome, you've also tossed your hat maybe in for TikTok. I know there's a lot of folks out there. Is there something you are looking to purchase, to do as an add-on, a major purchase?
I mean, we are seriously still in the fight for TikTok. Obviously, that is that process is subservient to the larger U.S.-China trade relationship, and I don't think there's going to be any forward progress until the larger tariff and trade situation is resolved. But we're very excited about the role we can play in making TikTok more transparent and more useful to Americans. So that's very much in flight. Otherwise, we just want to keep adding to our all-star engineering team. And so the type of acquisitions we like to do are small acqui-hires of 5 to 10 person engineering teams.
Okay. We'll be watching. Dimitri, thank you so much. Really
thank you. This is fun. And thanks for using.
You don't use TikTok, do you?
I do.
Oh, okay.
Yeah.
All right. Do you do traditional search?
Sometimes for navigational queries.
Okay.
Yeah.
Google?
Yeah.
Okay, all right.
Yeah.
He's all in.
That was a speed round of questions, by the way. Thanks
you
for
got to
playing
use
along.
everything. Yeah.
You do. You got to check out the competition too. All right, Dimitri, thank you so much. Dimitri Shevelenko, he's the Chief Business Officer over at Perplexity, joining us here at Milken. I do want to send it back to our New York offices and bureau and to Bonnie Quinn for a quick check on what's going on with the markets. Hey, Bonnie.
Hey, Carol, thank you so much. Yes, we are crawling ever more into the green for these indices. We have the S&P now down less than 0.1%. If you look at the NASDAQ 100, we're down just 8 points, and that's thanks to the likes of MongoDB, CrowdStrike, some of the gaming companies doing really well today too, including Take-Two and Electronic Arts. They're helping the S&P 500 as well. That index is lower, but as I say, down less than 5 points. So it's really a market that's trading a little bit on the economic data that we got this morning, which showed solid services data in the US economy, a reading of higher than 51, so a pickup at service providers. And that said, a market's also waiting for more trade headlines. One interesting one is Berkshire Hathaway down 4.5%. Of course, Warren Buffett recommending that Greg Abel takes over at the end of the year. But he did also say that shares were, if not overvalued, at least valued higher than he would like to increase any share buybacks at, albeit with an extra tax on buybacks by Berkshire itself. But that is an interesting mover today. The VIX index there, as you see, is still showing calm below 23. So let's get it back now to the Milken Institute conference in Beverly Hills, California. Carol.
All right, Bonnie, thank you so much. Well, last Thursday, Ventas shares fell as much as 7.2%. That was the most intraday since June of 2020 after the Senior Housing Real Estate Investment Trust left its full-year funds from operations guidance unchanged. I will point out, though, analysts, they pretty much noted the first quarter earnings beat. That's what they stressed. And the $30 billion market cap REIT, I should point out, is still up around 13% year to date. So let's get into it. Deborah Cafaro is with us. Of course, she is the chairman and CEO of Ventas, and she joins us here at Milken. How are you?
Doing great, thank you.
We just came off of, we did a panel on global real estate. It was kind of fun and spirited. I am curious from your vantage point, what struck you, what surprised you in that discussion? Because I felt like there was a fair amount of optimism, but some reality checks.
Well, the thing that really struck out to me in the panel was about the convergence around thinking about real estate differently as we go forward. And there was a lot of convergence on that, as you know. Some of the historically core asset classes are really not going to be core going forward. And some of the asset classes, like where there is secular demand, are going to explode in terms of the size of the market, but also the returns. And that was, I think, came through loud and clear. From a macro standpoint, there was mixed optimism, I would say. We all agree that the U.S. is the best, largest, most diverse, most powerful economy in the world. And our job is to take care of it and make sure we're winning for the right reasons. And we adopt the right policies to continue that growth.
What are the structural changes in our economy that ends up fueling Ventas's growth?
Well, the biggest change that fuels Ventas's growth, and we've delivered 19% annual returns for 25 years based on the mega trend of the longevity economy. So we serve a large and growing aging population, whether it's the over 80 or the over 65. And that is an inexorable demand trend that is necessary but not sufficient for success. So what we try to do is operate these assets, whether they're outpatient medical, senior living, in a way with data and operational insights so that we are outperforming even the beta on those long tailwinds that we have in our business. So that's the big structural driver.
Deborah, I'm curious about any policies from the administration, whether it's on Medicare, whether it's on R&D that impacts the healthcare industry. This is all your world.
Yes.
How are you watching it, and what could possibly impact your business?
Yes. Well, one good thing is we are very insulated from the tariff discussion. We're primarily North American. We don't have a lot of cost of goods in our business that would be negatively affected by tariffs, and so that's a really good thing. Our biggest business is a consumer-driven model that is a value for seniors and their families to live with us in independence as long as they can, and so that is less affected by federal policy. The areas that we do watch are Medicare, where we have some outpatient medical and other healthcare facilities. And there's been a policy statement that the government is really supportive of continuing Medicare. I mean, 11,000 people a day turn 65.
Do you believe it?
I believe that Medicare will be supported. It is one of the most ubiquitous policies that we have. It cuts across all socioeconomic boundaries, and I think we will continue to support Medicare. And then in biomedical research, where we do have a lab business, I would say we are the global leader in biomedical research. It is the envy of the world and is going to long-term reduce healthcare costs. Half our country will have chronic conditions by 2030. And in order to treat those in the most cost-effective way and allow people to live healthier lives with less reliance on the healthcare system, we have to continue to develop and discover drugs that cure disease and treat chronic illness, and that is where we are best in the world, and I strongly encourage the administration to continue those policies, which, P.S., have a big multiplier effect on our economy.
Have you had a chance to talk to the administration directly about this?
I hope to do so right here at this conference.
All right. Well, a lot of them are walking around. I saw them. Deborah, we'll let you chase them down. Deborah Cafaro is the chairman and CEO of Ventas. All right, coming up here on the big program, and thanks for joining us. So we're going to talk venture capital.
Hey, you're here.
We've talked private capital. We've talked
Yes.
public markets. Let's talk about the venture space. Dana Settle, she's a co-founder over at Graycroft, the managing partner there. She's going to be joining us in just a second. Of course, AI really dominating the VC space as it's dominating the public space. The question is, how do you get those private companies into the public markets? She might have some answers to that.
I can't wait to talk with her. Hey, folks, we're not only a lot going on here at Milken, we do want to take a live look at a panel with the founders of KKR, legends when it comes to private equity. Henry Kravis and George Roberts up on stage, moderated by Bloomberg's very own Jason Kelly. Take a listen, take a watch. We'll be right back with our special coverage right here at Milken. This is Bloomberg.
We're stewards of people that have entrusted us with their money, and getting them the kind of returns, a fair kind of return with performance, is how we're going to be able to grow that. And then obviously technology is going to enable this to become even more efficient than what it is today.
And so, Henry, what are the mechanics of getting that done, this retail piece especially? Because I think it's fair to say that's been a holy grail for the alternatives business for a long time. It now seems really on the verge of happening. What does it look like in practice for, there are a lot of very more successful people than I, but I have a 401k, I'd love some KKR on my 401k, no conflicts.
Well, but, actually, we were going to ask you on stage if you'd sign up here, and you could be an investor with us. We'd like that. Look, we have four product categories where people can invest. You have the private markets, which is private equity, it's growth equity, et cetera. We have infrastructure, we have real estate, and we have credit. And we distribute the product on platforms, very much like Capital Group, and a few others. And a year ago, at this time, we had about $8 billion of assets under management from this group. Today it's $21 billion.
And of course, that is Henry Kravis and George Roberts talking with our own Jason Kelly up on stage here at Milk. And I'm Carol Massar along with Romaine Bostick. And this is Bloomberg.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, the lift in futures comes on optimism trade tensions may be easing between the U.S. and China. Treasury Secretary Scott Bessent and U.S. Trade Representative Jamieson Greer will hold trade talks with China's Vice Premier He Lifeng this weekend. The officials are due to meet in Switzerland Saturday and Sunday. These will be the first confirmed talks since President Trump announced tariffs of up to 145% on Chinese imports, and Beijing retaliated with its own levies. Here's Secretary Bessent speaking on Fox News.
I think that this is what we're going to do in Switzerland is we've agreed to talk. Then on Saturday and Sunday, we will agree what we're going to talk about. My sense is that this will be about de-escalation, not about the big trade deal. But we've got to de-escalate before we can move forward.
Treasury Secretary Scott Bessent says current tariff rates are not sustainable and amount to a trade embargo.
Nathan, just hours after the talks were announced, China took steps to boost its economy. The country's central bank cut its policy rate and lowered the amount of cash lenders must keep in reserve. Economists say the decisions demonstrate policymakers are acting with urgency to support the world's second largest economy in the face of the U.S.-China trade war.
Now, Karen, we turn to a tense situation in South Asia between two nuclear-armed powers, India and Pakistan. Traded military strikes overnight, weeks after a militant attack in the disputed Kashmir region that killed 26 people. India says it hit 9 targets, calling them known terror camps. Pakistan's military says the strikes killed 26 civilians. It responded by shooting down 5 Indian jets. We get more from Bloomberg New Delhi Bureau Chief Debjit Chakraborty.
Both the sides are saying that these were de-escalatory kind of moves. India has said that it only had one thing in their mind, just to target the militants which were trying to destabilize the Kashmir region, the economic development of that path. Pakistan has always said that we won't do anything unless India attacks.
Bloomberg's Debjit Chakraborty says the last time India and Pakistan came close to all-out war was 2019, when a suicide bomber killed 40 members of India's security forces.
Nathan, former President Joe Biden has described the White House's approach to Russia as modern-day appeasement. Biden was asked by the BBC what he thought of President Trump's peace plans for Ukraine.
It is modern-day appeasement. Look, listen to what Putin said when he talked about going from Kyiv into Ukraine and why. He can't stand the fact that the Russian dictatorship that he runs, that the Soviet Union has collapsed. And anybody thinks he's going to stop is just foolish.
Joe Biden's interview with a British broadcaster is his first since leaving office.
Karen, Senate Majority Leader Chuck Schumer is looking for answers after last month's incident at New Jersey's Newark Airport that left air traffic controllers out of contact with planes for 90 seconds. Transportation Secretary Sean Duffy says the air traffic control system is safe, but Minority Leader Schumer says he has plenty of concerns.
First, the firing of so many employees under DOGE has weakened the FAA. Second, a good number of top-level people who are concerned with air safety and flight safety have left out of exasperation because they think the people who have been put in charge don't know what they're doing.
Senate Minority Leader Chuck Schumer spoke on Bloomberg's Balance of Power. You can catch the full conversation on the Bloomberg Podcasts page on YouTube. Transportation Secretary Duffy says a build-out of a new air traffic control system should be completed by the summer, but the current one, he says, has backups for pilots and controllers.
Nathan, President Trump met with Canadian Prime Minister Mark Carney in the Oval Office. The leaders showed no signs of retreating from their differences in the ongoing trade war. And Bloomberg's Amy Morris reports from Washington.
After the meeting, Prime Minister Carney says there will be more talks.
We agreed to have further conversations in the coming weeks, and we are looking forward to meeting in person at the G7 summit in Kananaskis in Alberta.
President Trump told reporters there are no firm trade deals with Canada, China, or any other country.
They don't have to sign deals. They have to sign deals with us. They want a piece of our market. We don't want a piece of their market. We don't care about their market. They want a piece of our market.
As for Canada becoming the 51st state, Carney says it'll never be for sale, but Trump told Carney, never say never. In Washington, Amy Morris, Bloomberg Radio.
All right, Amy, thank you. Turning to markets now as investors and the Federal Reserve await clarity on the Trump administration's trade policies. The Fed is expected to leave interest rates unchanged this afternoon. We get a preview of the decision today from Bloomberg's Michael McKee.
There's still no suspense at the Fed. Without any clear idea of who will be taxed, how much, and when, the central bank waits like everyone else for some idea of what the Trump tariffs will do to the economy. So there's little point in changing interest rates. Fed officials also don't provide new economic forecasts or a new dot plot at this meeting, which pretty much leaves Chairman Powell and his press conference as the only opportunity for headlines, which, given the circumstances, he will likely avoid as much as possible. Michael McKee, Bloomberg Radio.
Okay, Mike, thanks. And stay with Bloomberg for full Fed coverage on a special edition of Bloomberg Surveillance. The Fed Decides. It begins at 1:30 p.m. Wall Street time on Bloomberg Radio, Bloomberg Television, and the Bloomberg Podcast's YouTube page.
Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. The Cleveland Cavaliers had a brilliant regular season going 64-18, but they are in big trouble in round 2 of the NBA playoffs as Indiana rallied late, got a Tyrese Halliburton three-pointer with 1 second left, and won 120-119. The Pacers go home up 2-0 in the series. Golden State won Game 1 at Minnesota 99-88. In the NHL, Carolina won Game 1 at Washington 2-1 in overtime, and Edmonton beat Vegas 4-2. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.
You're listening to an iHeart podcast.
Live from Singapore, this is Insight with Haslinda Amin, a show where we dive deeper into the stories that matter with crucial context and sharp analysis. Oil prices plunge on fears of a global glut after OPEC Plus stuns with bigger output hike at a time when demand is challenged by Trump's trade war. We'll be speaking in a moment to Feridun Fesharaki, known for his pioneering oil and gas market analysis. He'll share his view on the cartel's seismic shift to sink prices. Bloomberg learns that representatives for Indian billionaire Gautam Adani met Trump officials about dismissing the U.S. criminal charges for bribery. Exclusive details just ahead. Meanwhile, Warren Buffett shocking global investors, fans, and even his own board by saying he plans to step down as CEO of Berkshire Hathaway by year-end. We'll discuss his legacy and the firm's future under Greg Abel, who has to build on a 5.5 million% gain in Berkshire's stock and decide how to deploy a $350 billion cash pile. Well, it is a sinking feeling in the oil market. We have WTI crude and Brent crude currently trading lower, down by almost 4% as we speak, of course, extending the declines we've seen in recent weeks. OPEC Plus, of course, agreed to boost output by over 400,000 barrels a day. And we have the likes of Morgan Stanley cutting its Brent price forecast by $5 to $62.50 for Q3 and Q4. Goldman, not to be outdone, cutting its Brent prices forecast by $2 to $3. It sees Brent averaging $60 per barrel this year. Take a look at where we are in terms of Brent crude and New York crude in negative territory, again, extending those declines we've seen in recent weeks. Well, our next guest is well recognized worldwide for pioneering oil and gas market analysis and studies of the Asia-Pac and Middle East energy market since the early 1980s. Let's bring in Feridun Fasharaki, Chairman Emeritus at International Energy Consultancy, FGE. Good to have you with us. Perfect timing having you here in the studio.
Absolutely.
How are you reading into Saudi Arabia's move to ramp up production?
Well, we have to look at the oil market as oil market is a small ship in the middle of a turbulent ocean. The turbulent ocean created by all of the tariffs and all the Trump various plans and procedures, but it has its own problems. So in one way, OPEC can control its own destiny partially, but cannot control its own destiny fully. And to try to control its own destiny, OPEC has been trying to balance the supply and demand and find that continuously problem with the overproducers, Kazakhstan and Iraq, and really they have no choice but to let the prices go and teach the market a lesson. Best cure for lower prices is even lower oil prices.
But is it just about getting Kazakhstan and Iran back in line? Isn't it also about politics? Isn't this Saudi Arabia trying to be on the right side of Trump?
I think President Trump wants the oil prices to go low, but not too low. I think the prices in the 50s would do serious damage to the U.S. production, and U.S. production will fall. We expect U.S. production to grow a couple of 100,000 barrels per day this year before peaking in 27. But if the prices are low, they would start falling right now. So I think President Trump will be calling the Saudis and ask them, please, don't let the prices go down anymore.
So essentially, Saudis are trying to have their cake and eat it, right? Trying to balance the market, also trying to get rid of the excess supply from U.S. producers, for instance. If prices go really low, they'll be forced to stop production.
Yes, I mean, really, if you put yourself in the place of Saudi Arabia, what they do makes eminent sense. Like you said, hits several targets. I don't believe this is a long-term strategy by any means, but the strategy could be a few months, 6 months, and then the strategy will change by the request from the White House, by the overproducers learning a lesson, and by the markets coming into more balance. So the ship can only go so far. The rest of it depends on the global. Will we have a global recession or not? Well, if tariffs continue, yes, we have a global recession.
How do you balance the market? At what price would rebalance this market, according to the Saudis?
I think prices $65, $75 is something which can balance the market. $70 and higher are certainly doable. The market is tight. The fundamentals are good. The inventories are low. This is not a loose market which is falling apart. Contrary to what we read from some of the journalists here or there, this is a strong market. So if you want to do this, this is the right time to do it.
Well, Faradun, looking at where oil prices are right now, it is exactly where the Saudis want it to be for a balanced market.
Well, the markets move by its own forces. As I said, it's a little ship in the middle of the ocean, but all the turbulence outside can drive the prices lower. But it's not a long-term strategy. It's a strategy which is right for today. This is the right timing for it. And if I were them, I would do exactly the same.
Obviously, prices under a lot of pressure. Where do you see prices headed in the next few months? I mean, some are already saying perhaps sub 50 could be something we are looking at.
Well, if there is a recession coming, which will come if we don't undo the tariffs, the prices can go sub 50. But if there is no recession and the market is relatively performing well, then the prices would be in low 50s. And the balance will come by itself.
How much is China a factor in all of this, bearing in mind that its growth projection has been cut by a lot of the banks? Some see growth perhaps below 4%. China itself says it'll be around 5%.
Well, the Chinese economic growth doesn't really directly impact oil demand. It's the EVs which impact oil demand. So the EVs have first led to a peak in diesel demand, and also using a lot of LNG for tanker transport. Gasoline will peak in 25, 26, but the demand for naphtha, the demand for jet fuel, the demand for bunkering continues to go up. So maybe a peak in 2-3 years from now, but no collapse in demand. There is going to be sort of sideways. But if you have a growth rate of 5%, that doesn't necessarily mean that the demand will jump. It will do better, of course. But at the moment, EVs are driving the Chinese oil demand rather than anything else.
What happens to demand when growth is 4%? No impact at all, if you're saying that it's solely dependent on the EV industry in China?
Maybe makes a 50, 100,000 barrels per day impact. If it also grew by 2%, maybe 50, 100,000 barrels per day less impact. But most of the demand impact is coming on gasoline and diesel, and mostly because of the EVs and use of LNG tankers.
Am I right to think that if oil prices were to drop further, you'll see an increase in demand from China?
I think a little bit of increase in demand, but you will get a big increase in demand all over the world. All of Asian countries, the demand will increase. Latin America will increase. Africa will increase. Even in Europe and US, the demand will increase. So lower oil prices will lead to increased demand and lower oil production. There is no escape from it.
We know that the Saudi Arabia has a close relationship with Russia. You've got to think about how Russia is looking at efforts by the Saudis to actually ramp up production and lower prices. Bearing in mind, of course, the Ukraine war is ongoing and Russia needs the oil revenues to actually support that war.
Well, of course, the result of this kind of agreement is the Russian oil production will go up. So maybe lower prices, but not necessarily much lower revenue, because the total money coming in will be impacted by a higher production. And the same with the Saudis. You sacrifice as far as you can, and the Saudis and the Russians are on the same page. There is a good understanding and read of the market between them. So it is something that they have thought about it, and they've come to agree on it, and it is not going to be a shock to the system at all.
So you're saying the Russians are in line with the Saudis?
Oh, absolutely.
What are some of the key things that you're looking out for that will shape and dictate the prices in the coming months?
The number one issue is the demand that Trump policies. Is the ocean, and the ship is inside the ocean. You can navigate it towards the place that you want to go, but you can be taken away by the waves of the ocean. If the tariffs continue and they are not rescinded, then the demand will fall worldwide, economic growth will fall. The US will go into a recession. There is no doubt about it. That then would impact the demand. So I'll be looking at Trump policies first in assessing the demand rather than anything else.
As it stands now, do you sense that Trump will ease on his tariff policy? We're already seeing a softening, for instance, in conversations to do with trade between the US and China.
I think there is no choice. if you continue these policies, you create a global recession and you hit U.S. most. And, he said the first quarter poor performance is because of Biden, but he cannot say second quarter performance also because of Biden. He has to take responsibility, and I don't think there is any possibility that these tariffs can continue long term.
Let's talk about the LNG sector. We've seen prices on a downward spiral as well. What do you make of that?
Well, they are governed by different forces. Most important factor in the LNG market is, again, tariffs in China. The Chinese, they don't want to lift the U.S. volumes anymore because of the tariffs they imposed. But also there are discussions about reducing the inventory requirements in Europe, which can make a very big difference in the market. The prices at the moment, $10, $11, $12 spot prices are weak. They are not disastrous. But this market will go through a very turbulent change. By the end of this year, we expect the prices to go higher. And by 26, 27, we expect the prices to go substantially lower, because the supply increases by 50% in 2-3 years. The global market has never seen anything like this before.
How much higher by the end of the year, and how much of a drop after that?
By the end of the year, the prices could go 50, 60% higher than they are today. And 2 years from now, 3 years now, they can drop by 60, 70%.
Not too long ago, we were talking about an energy crisis as a result of the war in Ukraine. Is that over?
Well, if there is a peace between Ukraine and Russia and some volumes go to Europe, then that's bad news for the LNG prices in Europe. But I don't think anybody seriously believes that a peace can come and everything would be hunky-dory after that. So I think that the market will go by its own force. And the economic growth, Trump policies, again, are the dominant factor in the demand side, and they will impact very much
Of course, this is also an environment where there are expectations the dollar will go weaker from here. It's already seeing, we've already been reporting today about how Asian currencies have, been on the upside, some seeing at record levels. How do you think that will play into the oil market?
Well, tell me about it. We all bill everybody in US dollars, and we spend Sing dollars and British pounds. So I think that as soon as the policies on tariffs are reversed and there is some order in the market, I think US dollar will gain and things will come to a balance. But pushing this path that we have today is towards a disaster.
Ferdinand, always a pleasure to get your insights. Ferdinand Feshiraki, Chairman Emeritus at FGE. Now, meanwhile, President Trump continues to keep investors guessing about his tariff policy. He suggested that some trade deals could happen as soon as this week. Speaking aboard Air Force One, Trump said it will be up to him, not the other countries, when such deals are completed. The president didn't specify which countries were closest to securing a deal. He also signaled his aides were speaking with their counterparts from China while insisting on concessions from Beijing.
Well, I want a fair deal with China, but China's been ripping us off for many years, so maybe something should be thought about, a little bit of retribution. China's been ripping us off for many years, ever since they started.
Now, earlier, Trump also told NBC he was willing to lower tariffs on China at some point because the levies are so high, the two countries have essentially stopped doing business. He praised recent statements from Beijing as positive. China said last Friday it was assessing the possibility of trade talks. And amid uncertainty over Trump policy, investors are placing an extra risk premium on U.S. assets. The dollar is the worst performing G10 currency this year. It's also led to a surge in Asian currencies in the past week. Avril Hong is here to break things down. Avril, to what extent are further gains expected for Asian currencies, especially on the back of expectations that dollar will continue in its weakness?
Yeah, Asia's currency surge very much expected to continue. The dollar slump against the backdrop of these hopes for trade deals. And I think our MLife strategist, Mark Cranfield, put it best. We've been through the first phase of dollar losses, and that was against the G10s, and now it's kind of spreading to the EM. So Asia currencies today are the ones that are surging. A bit of complication because onshore markets are still shut, and that typically provides a sort of anchor. But where the attention really is in the Taiwan dollar. We've seen it surge by the most since 1988 to the highest level in about 2 years. And of course, if you look back to Friday, we saw it the most traded in terms of the NDFs. It does look like Taiwan dollar shorts, which were being used as a way to hedge against a protracted US-China trade war, those trades are now being called flat-footed, wrong-footed, and that positioning has a lot to do with the moves in the markets today. But flip the board, I also wanted to rake through what we're seeing in the dollar specifically, because we've been seeing it slumping regardless of whether tariff concerns have been intensifying or whether they've been easing. And one good example would be last Friday, where we saw the upside to the jobs report. The yields rose, but the dollar still slumped. So the dollar is not benefiting from the high yield advantage. So that is a relationship that seems to have broken down, and it does give you the sense that even with a softening in the US-China's tariff stance towards one another, that the sell America sentiment, that is still very much intact. Pass.
That's right. U.S. exceptionalism in question. Avril Hong, thank you so much for that. Let's do a check on markets again. Live from Singapore, this is Insight with Haslinda Amin, a show where we dive deeper into the stories that matter with crucial context and sharp analysis. Oil prices plunge on fears of a global glut after OPEC Plus stuns with bigger output hike at a time when demand is challenged by Trump's trade war. We'll be speaking in a moment to Feridun Fesharaki, known for his pioneering oil and gas market analysis. He'll share his view on the cartel's seismic shift to sink prices. Bloomberg learns that representatives for Indian billionaire Gautam Adani met Trump officials about dismissing the U.S. criminal charges for bribery. Exclusive details just ahead. Meanwhile, Warren Buffett shocking global investors, fans, and even his own board by saying he plans to step down as CEO of Berkshire Hathaway by year-end. We'll discuss his legacy and the firm's future under Greg Abel, who has to build on a 5.5 million% gain in Berkshire's stock and decide how to deploy a $350 billion cash pile. Well, it is a sinking feeling in the oil market. We have WTI crude and Brent crude currently trading lower, down by almost 4% as we speak, of course, extending the declines we've seen in recent weeks. OPEC Plus, of course, agreed to boost output by over 400,000 barrels a day. And we have the likes of Morgan Stanley cutting its Brent price forecast by $5 to $62.50 for Q3 and Q4. Goldman, not to be outdone, cutting its Brent prices forecast by $2 to $3. It sees Brent averaging $60 per barrel this year. Take a look at where we are in terms of Brent crude and New York crude in negative territory, again, extending those declines we've seen in recent weeks. Well, our next guest is well recognized worldwide for pioneering oil and gas market analysis and studies of the Asia-Pac and Middle East energy market since the early 1980s. Let's bring in Feridun Fesharaki, Chairman Emeritus at International Energy Consultancy, FGE. Good to have you with us. Perfect timing having you here in the studio.
Absolutely.
How are you reading into Saudi Arabia's move to ramp up production?
Well, we have to look at the oil market as oil market is a small ship in the middle of a turbulent ocean. The turbulent ocean created by all of the tariffs and all the Trump various plans and procedures, but it has its own problems. So in one way, OPEC can control its own destiny partially, but cannot control its own destiny fully. And to try to control its own destiny, OPEC has been trying to balance the supply and demand and find that continuously problem with the overproducers, Kazakhstan and Iraq, and really they have no choice but to let the prices go and teach the market a lesson. best cure for lower prices is even lower oil prices.
But is it just about getting Kazakhstan and Iran back in line? Isn't it also about politics? Isn't this Saudi Arabia trying to be on the right side of Trump?
I think President Trump wants the oil prices to go low, but not too low. I think the prices in the 50s would do serious damage to the U.S. production, and U.S. production will fall. We expect U.S. production to grow a couple of 100,000 barrels per day this year before peaking in 27. But if the prices are low, they would start falling right now. So I think President Trump will be calling the Saudis and ask them, please, don't let the prices go down anymore.
So essentially, Saudis are trying to have their cake and eat it, right? Trying to balance the market, also trying to get rid of the excess supply from U.S. producers, for instance. If prices go really low, they'll be forced to stop production.
Yes, I mean, really, if you put yourself in the place of Saudi Arabia, what they do makes eminent sense. Like you said, hits several targets. I don't believe this is a long-term strategy by any means, but the strategy could be a few months, 6 months, and then the strategy will change by the request from the White House, by the overproducers learning a lesson, and by the markets coming into more balance. So the ship can only go so far. The rest of it depends on the global. Will we have a global recession or not? Well, if tariffs continue, yes, we have a global recession.
How do you balance the market? At what price would rebalance this market, according to the Saudis?
I think prices $65, $75 is something which can balance the market. $70 and higher are certainly doable. The market is tight. The fundamentals are good. The inventories are low. This is not a loose market which is falling apart. Contrary to what we read from some of the journalists here or there, this is a strong market. So if you want to do this, this is the right time to do it.
Well, Faridun, looking at where oil prices are right now, it is exactly where the Saudis want it to be for a balanced market.
Well, the markets move by its own forces. As I said, it's a little ship in the middle of the ocean, but all the turbulence outside can drive the prices lower. But it's not a long-term strategy. It's a strategy which is right for today. This is the right timing for it. And if I were them, I would do exactly the same.
Obviously, prices under a lot of pressure. Where do you see prices headed in the next few months? I mean, some are already saying perhaps sub 50 could be something we are looking at.
Well, if there is a recession coming, which will come if we don't undo the tariffs, the prices can go sub 50. But if there is no recession and the market is relatively performing well, then the prices would be in low 50s, and the balance will come by itself.
How much is China a factor in all of this, bearing in mind that its growth projection has been cut by a lot of the banks? Some see growth perhaps below 4%. China itself says it'll be around 5%.
Well, the Chinese economic growth doesn't really directly impact oil demand. It's the EVs which impact the oil demand. So the EVs have first led to a peak in diesel demand, and also using a lot of LNG for tanker transport. Gasoline will peak in 25, 26, but the demand for naphtha, the demand for jet fuel, the demand for bunkering continues to go up. So maybe a peak in 2-3 years from now, but no collapse in demand. There is going to be sort of sideways. But if you have a growth rate of 5%, that doesn't necessarily mean that the demand will jump. It will do better, of course. But at the moment, EVs are driving the Chinese oil demand rather than anything else.
What happens to demand when growth is 4%? No impact at all, if you're saying that it's solely dependent on the EV industry in China?
Maybe makes a 50, 100,000 barrels per day impact. If it also grew by 2%, maybe 50, 100,000 barrels per day, less impact. But most of the demand impact is coming on gasoline and diesel, and mostly because of the EVs and use of LNG tankers.
Am I right to think that if oil prices were to drop further, you'll see an increase in demand from China?
I think a little bit of increase in demand, but you will get a big increase in demand all over the world. All of Asian countries, the demand will increase. Latin America will increase. Africa will increase. Even in Europe and US, the demand will increase. So lower oil prices will lead to increased demand and lower oil production. There is no escape from it.
We know that the Saudi Arabia has a close relationship with Russia. You got to think about how Russia is looking at efforts by the Saudis to actually ramp up production and lower prices. Bearing in mind, of course, the Ukraine war is ongoing and Russia needs the oil revenues to actually support that war.
Well, of course, the result of this kind of agreement is the Russian oil production will go up. So it may be lower prices, but not necessarily much lower revenue, because the total money coming in will be impacted by a higher production. And the same with the Saudis. You sacrifice as far as you can, and the Saudis and the Russians are on the same page. There is a good understanding and read of the market between them. So it is something that they have thought about it, and they've come to agree on it, and it is not going to be a shock to the system at all.
So you're saying the Russians are in line with the Saudis?
Oh, absolutely.
What are some of the key things that you're looking out for that will shape and dictate the prices in the coming months?
The number one issue is the demand that Trump policies. Is again, the ocean, and the ship is inside the ocean. You can navigate it towards the place that you want to go, but you can be taken away by the waves of the ocean. If the tariffs continue and they are not rescinded, then the demand will fall worldwide. The economic growth will fall. The US will go into a recession. There is no doubt about it. That then would impact the demand. So I'll be looking at Trump policies first in assessing the demand rather than anything else.
As it stands now, do you sense that Trump will ease on his tariff policy? We're already seeing a softening, for instance, in conversations to do with trade between the US and China.
I think there is no choice. If you continue these policies, you create a global recession and you hit US most. And, he said the first quarter poor performance is because of Biden, but he cannot say second quarter performance also because of Biden. He has to take responsibility, and I don't think there is any possibility that these tariffs can continue long term.
Let's talk about the LNG sector. We're seeing prices on a downward spiral as well. What do you make of that?
Well, they are governed by different forces. Most important factor in the LNG market is, again, tariffs in China. The Chinese, they don't want to lift the US volumes anymore because of the tariffs they imposed. But also there are discussions about reducing the inventory requirements in Europe, which can make a very big difference in the market. The prices at the moment, $10, $11, $12 spot prices are weak. They are not disastrous. But this market will go through a very turbulent change. By the end of this year, we expect the prices to go higher. And by 26, 27, we expect the prices to go substantially lower, because the supply increases by 50% in 2-3 years. The global market has never seen anything like this before.
How much higher by the end of the year, and how much of a drop after that?
By the end of the year, the prices could go 50, 60% higher than they are today. And 2 years from now, 3 years now, they can drop by 60, 70%.
Not too long ago, we were talking about an energy crisis as a result of the war in Ukraine. Is that over?
Well, if there is a peace between Ukraine and Russia and some volumes go to Europe, then that's bad news for the LNG prices in Europe. But I don't think anybody seriously believes that a peace can come and everything would be hunky-dory after that. So I think that the market will go by its own force. And the economic growth, Trump policies, again, are the dominant factor in the demand side, and they will impact very much the
Of course, this is also an environment where there are expectations the dollar will go weaker from here. It's already seeing, we've already been reporting today about how Asian currencies have, been on the upside, some seeing at record levels. How do you think that will play into the oil market?
Well, tell me about it. We all bill everybody in US dollars, and we spend Sing dollars and British pounds. So I think that as soon as the policies on tariffs are reversed and there is some order in the market, I think US dollar will gain and things will come to a balance. But pushing this path that we have today is towards a disaster.
Ferdinand, always a pleasure to get your insights. Ferdinand Fashiraki, Chairman Emeritus at FGE. Now, meanwhile, President Trump continues to keep investors guessing about his tariff policy. He suggested that some trade deals could happen as soon as this week. Speaking aboard Air Force One, Trump said it will be up to him, not the other countries, when such deals are completed. The president didn't specify which countries were closest to securing a deal. He also signaled his aides were speaking with their counterparts from China while insisting on concessions from Beijing.
Well, I want a fair deal with China, but China's been ripping us off for many years, so maybe something should be thought about, a little bit of retribution. China's been ripping us off for many years, ever since they started.
Now, earlier, Trump also told NBC he was willing to lower tariffs on China at some point because the levies are so high, the two countries have essentially stopped doing business. He praised recent statements from Beijing as positive. China said last Friday it was assessing the possibility of trade talks. And amid uncertainty over Trump policy, investors are placing an extra risk premium on U.S. assets. The dollar is the worst performing G10 currency this year. It's also led to a surge in Asian currencies in the past week. Avril Hong is here to break things down. Avril, to what extent are further gains expected for Asian currencies, especially on the back of expectations that dollar will continue in its weakness?
Yeah, Asia's currency surge very much expected to continue. The dollar slump against the backdrop of these hopes for trade deals. And I think our MLife strategist, Mark Cranfield, put it best. We've been through the first phase of dollar losses, and that was against the G10s, and now it's kind of spreading to the EM. So Asia currencies today are the ones that are surging. A bit of complication because onshore markets are still shut, and that typically provides a sort of anchor. But where the attention really is in the Taiwan dollar. We've seen it surge by the most since 1988 to the highest level in about 2 years. And of course, if you look back to Friday, we saw it the most traded in terms of the NDFs. It does look like Taiwan dollar shorts, which were being used as a way to hedge against a protracted US-China trade war, those trades are now being called flat-footed, wrong-footed, and that positioning has a lot to do with the moves in the markets today. But flip the board, I also wanted to rake through what we're seeing in the dollar specifically, because we've been seeing it slumping regardless of whether tariff concerns have been intensifying or whether they've been easing. And one good example would be last Friday, where we saw the upside to the jobs report. The yields rose, but the dollar still slumped. So the dollar is not benefiting from the high yield advantage. So that is a relationship that seems to have broken down, and it does give you the sense that even with a softening in the US-China's tariff stance towards one another, that the sell America sentiment, that is still very much intact. Haas.
That's right. US exceptionalism in question. Avril Hong, thank you so much for that. Let's do a check on markets again, especially assets in Australia as well as Singapore. On the back of the elections we saw over the weekend, of course, we saw a swing to stability. Albanese's Labour government seeing a landslide win, along with Singapore's ruling party, the PAP, winning 87 of 97 seats in election. It does seem like voters want stability in light of the trade war that we're seeing in the world today. Take a look at where we are in terms of the STI, currently flat, slightly in the negative, down about 0.1%. The ASX 300 index also down, lower by about 0.8%, pretty much in line with the rest of the region. Of course, their currencies in focus. The Aussie dollar currently trading 64.64, up by 0.5% versus the USD, and in terms of the Sing dollar, also trading higher by about 0.5%. Well, still to come, a closer look at what lies ahead for Berkshire Hathaway after Warren Buffett announced he'll be stepping down as CEO. We'll discuss that with our panel of guests just a little later. Plus, a shock plot twist for Hollywood as President Trump announces 100% tariffs on films produced outside the U.S.
As I reach a milestone in my life, I'm humbled by my good fortune, yet well aware that I still have much to learn. And if I stay true to myself and follow my instincts, my legacy will be looked on kindly by my friends, my family, and hopefully generations to come.
Welcome back to Insight. Bloomberg has learned that representatives for Indian billionaire Gautam Adani met with officials from the Trump administration about dismissing the criminal charges against him. Sources say the talks have intensified and could soon lead to a resolution. For more, Bloomberg's Pierre Sanjay joins us from Mumbai. Sanjay, what else do we know from developments?
Thank you, Aslinda. This is a developing story. Hectic lobbying, high pressure conversations are progressing right now. Representatives of Adani group, the port-to-power conglomerate, are progressing. The lobbyists and the legal representatives are in touch with DOJ officials and White House officials, and they are trying to convince. They are expecting. They are hopeful that this case, the criminal charges against the chairman and his nephew and few other executives will be disposed soon, which will have a positive implication on the group. And they clearly are saying that there's no charges against their company. It is against their rival company, and there's no listed companies being named. And with this current legal loopholes or legal clauses, Adani group is expecting, and the lawyers and lobbyists are expecting the case will be in favor of Adani, as I suggested earlier. This is a developing case because the discussions are still actively progressing. It has started in January and it has got a little bit more strengthened in February, and March it got intensified, and we are expecting hectic. It will have more legs in coming months, and they are expecting a kind of a disposal, or the criminal charges will be waived off or will be stopped in a month or two. And Adani Group is also heading towards their annual general meetings in next 2 months. So they are expecting, they're hopeful that there will be clarity in coming 2 months, and they are expecting a favorable reply or favorable decision from White House anytime soon.
So the talks are gaining momentum, Sanjay. The question really is, what arguments are being put forward by the Adani Group, by the Adani team, that could possibly help them?
Since beginning, they've been maintaining their stance very clear that there is no allegations against the listed companies, and there's no criminal charges, there's no fraud which is committed by these indicted people. That's what they're saying, and it's not about their company, but it's about a rival company, and they've been party to it by mistakenly, and they are saying that they're cooperating with all kind of investigations, so-called investigations, and they're very clear about from the day one there was no charges level against any criminal charges level against the indicted persons, including the chairman Gautam Adani and his nephew and few other officials. And they have not written formally because they have not been asked to do so. But the lobbyists and the legal representatives of Adani Group are talking to DOJ and White House officials to clarify their stance, and they're expecting a positive reply soon.
We know that Adani has a strong network in the U.S. How is Adani mobilizing the people there?
Adani has actually have committed a huge investment of $10 billion immediately after Trump has won the elections, but now that is put on hold, and he's mobilizing all his might over there, and he's appointed high-profile legal law houses and lobbies to gain momentum, to increase, to make their sound heard among DOJs and White House, and they have hired the top-notch high-profile legal representatives to put his case across. And it is what we learn late is that it has been gaining momentum, and it's going in the right directions. That's what we're picking from Adani camp at this point of time.
We know that Adani is a wealthy man. He's worth more than $70 billion. I'm just wondering, might he use that wealth to perhaps invest more in the U.S. to placate what's happening right now?
At this point of time, an investment in the U.S. will be like it's kind of a no, impossible thing with kind of investigation going on. So, but what we are picking up for the campus, once it's cleared from all the charges, he would reconsider investing in the U.S., which is a very normal course. And and also in between, there were a lot of U.S. investors have got they shown interest or confidence by taking part in some fundraising of Adani Group. That is also helping them, because that is also creating a positive narrative. And most recently, Indian Prime Ministers also shared or blessed countries to only the biggest transshipment project. That is also helping to create a positive narrative for Adani Group at this point of time.
Sanjay, thank you so much for that. Bloomberg Conglomerates reporter, PR Sanjay there. Now, still to come on Insight Live. After the Oracle of Omaha, we look at the future of Berkshire Hathaway. Welcome back. You're watching Insight. Legendary investor Warren Buffett waited until the final minute of his 60th shareholder meeting to announce his plans to retire, shocking investors, fans, and even his own board. The 94-year-old architect and face of Berkshire Hathaway is ending a historic run, turning what was a failing textile business in the 1960s into a corporate behemoth, while delivering a 5.5 million% in gains per share to investors. Taking over the $1.2 trillion giant will be Canadian-born energy executive Greg Abel. He faces plenty of questions over his plans for Berkshire. Well, chief among them is plans for the almost $350 billion cash pile Buffett has accumulated while largely sitting out the volatility of the past few years. Joining us now from Spokane, Washington is Todd Finkel, author of Warren Buffett, Investor and Entrepreneur. He's also the Piggott Professor of Entrepreneurship at Gonzaga University. And also joining us from Omaha is Bill Stone, CIO at the Glenview Trust Company. Glenn, good to have you with us. Bill, let's start with you. I'm just wondering, how are you reading the timing of that announcement? You know, I mean, we see its stock at record high prices. Well, it couldn't be a better time for that announcement.
Yeah, and I guess I taken even from last year's meeting that it looked very obvious to me that Greg Abel was running most of the operations day to day at Berkshire, and Buffett was very happy with that. I think spending all of his time reading and investing rather than getting involved in the management, which he tends not to do a lot of that, or tries to do very little of that as possible. It still shocked me a bit that he handed over the reins to, or is saying he's going to hand over the reins to, the capital allocation, just because I know, or from reading everything, that's what Warren Buffett loves most of all. But it probably makes most sense for the company. He is 94. We all only have so long, and I actually, as a shareholder, like that there's going to be some amount of overlap with Todd being, Greg, I'm sorry, being in charge of capital allocation.
Todd, why are we even surprised? His 94 is a long time coming.
Well, I was a little bit shocked, but I kind of saw it based on the things that were happening in the meeting that it just didn't make sense. A lot of the questions that were being asked that he was answering were more on personal growth. And he had all these young people asking questions like about life, and what should I do and all that stuff. Now, he's had that before at meetings. I've been to 15 meetings, and usually they're a nice change from what's on the balance sheet, And but to me, I've written this book, and I've taken tons of students to go visit him and been out to lunch with him 3 times. And my students all say the same thing, that the best thing that they learned from him was how to be a better person.
But Todd, what does it mean for the company?
For the company, Greg's been there for like 26 years, and he is a vice chairman already, and he's just going to take over Warren's position. I think he's going to do a great job. He's been mentored all these years. I haven't heard one negative thing about Greg Abel. Not one negative thing.
But Bill, Greg is 63. Most CEOs are thinking about retiring at that age. And there are expectations that when the stock starts trading today, it will go lower.
Well, I think the one thing you have to know about, certainly a lot of people at Berkshire, and I'd say it stretches to a lot of us investment people, is we hope to never retire. I can, at least that's the way I feel. So you can certainly go on for a long time, right? He's got at least another, 32 years, right? So he has some time. Certainly, if the stock might be indicated lower, it certainly adds to some uncertainty. We all knew this day was going to come at some point. Like I said, I think if you're a shareholder, you feel good that it happened before, I'll say it, quote unquote, had to happen. Because really, as I looked at Warren Buffett during that meeting, he's still very sharp. His mind is extremely sharp. He actually looked to me to have more energy this year than he had last year. And I think part of that was, of course, Charlie Munger passing away not long before the meeting last year. So I think that was a little bit of a downer. But for a 94-year-old guy, he seemed, very energetic. Maybe he was also excited to pass along the news in the end. But, I'm optimistic. As long as Greg doesn't try and be Warren Buffett, I think he'll probably do just fine.
I don't think anybody can try to be Warren Buffett. He is irreplaceable. Todd, I'm just wondering your thoughts on how Greg Abel will manage the company.
Are you asking me?
That's right.
Oh, okay. How will he manage it? I think he'll manage it very similar to Tom Murphy's methodology where, and that's what Warren Buffett went by. He was on the board of directors, and he learned a lot from Tom Murphy. That was probably his number one mentor, which is decentralization and buy quality business and hire the best people and leave them alone. Most companies don't do that.
And how do you see him managing the fund? It's a huge fund, and there are some expectations that perhaps, it is the cash pile that is in focus the most.
I'm not sure what he's going to do with that. I would imagine he's going to focus on energy to begin with, because that's where his biggest expertise is at. $350 billion.
Yeah, I think he's going to do the same thing, keep looking for opportunities. Just, I can't say just like Warren Buffett, but certainly, at least for now, right, Warren Buffett's still around. He's got Ted and Todd that also look around for opportunities. So, as Warren Buffett said at multiple times during the meeting, just really said, these opportunities come, irregularly. So we're always on the lookout. At least he's got the money to do it. I suspect, let's just say, they're eventually, when Warren passes on, et cetera, if we don't start to see some deals, I do think they might start a dividend. I don't think there'll be a dividend out of Berkshire Hathaway until Warren Buffett is gone, but it is certainly possible if it goes, I'll say, quote unquote, too long at some point.
Is it good enough for you? Is it good enough for an investor like you? We're talking about $340 billion in cash, and $40 billion is added every single time.
Well, I think they've earned the right to, I'm happy to let them have that capital because, they've earned in the past the right to use it. They've used it correctly. And, obviously, as you pointed out earlier, the historical returns, and even Buffett talked about that, at some point we'll be happy that we have that cash around because there will be a multitude of opportunities. We can't say when that'll be, but we should be happy. Again, though, once Warren's gone, it gets a little tougher because I'll say no mortal manager out there in corporate America gets as much of a leash or as much room as Warren Buffett. And rightly so. Again, he earned it.
Hey, Bill,
Todd, talk to us. Go ahead.
Sorry. I had a question for Bill. What do you think Warren's going to do? He's not going to retire completely. There's no way. He started work when he was 4 years old. I'm assuming he's going to continue to go in, right?
I absolutely think he'll stay. He didn't say it. I assume he's going to keep the chairman title, and he said he'd be around there to help. So I'm assuming essentially that's what it means. He's going to stay and do what he loves best, right? Which is read.
I don't think he's going to be the chairman.
Oh, really? It may be, but I think he'll be around. I think you're right. I think he'll still come into the office. Either way.
He'll be like an advisor. Or whatever you want
Probably play
to
the
call
part
it.
like Charlie Munger did. Probably play the part like Charlie Munger did before. I'm just wondering, Todd, talk to us about the key takeaways from Buffett's investing philosophy. He has changed the way investors think.
Yeah, I have 3 chapters in my book that talks about his value investment philosophy. He looks at qualitative and quantitative things, and he this is kind of funny. They say that he uses the discounted cash flow, but Charlie Munger always said that he's never seen him use the discounted cash flow method. So I think that it's part art and part science when you're trying to figure out what the value of a company is. And at lunch, I tried to figure out what his method is, and he just said the discounted cash flow. That was it.
What's been outstanding, Bill, is the kind of returns we've seen from Warren Buffett. I mean, take a look at the numbers. It's pretty mind-boggling, right? 5.5 million% returns from 1964 through 2024, when the S&P returned 39,000%. Annual gain, an average annual gain of 20% versus 10 for the S&P. Post-Buffett, Bill, are we likely to see that kind of returns again?
No, and you weren't going to see those returns even with Buffett. He actually gave a great quote at the meeting this year saying, size is one of Berkshire's biggest enemies. It's now the 6th largest company in the S&P 500. You just can't grow it that fast anymore. I think, any of us should be happy if it can keep up with the S&P over time. And there's nothing wrong with that because you've got a combination of an extremely safe company, and maybe it can squeeze out a little bit more than the S&P. We'll see. But again, I think you have to set your expectations correctly because the real positive for me is I can go to bed every night knowing this company is going to be absolutely fine, essentially no matter what happens. We could have a absolute, like we've had before, financial meltdown, and it will be left standing. And frankly, we'll get to take advantage of it. So that's the differential.
So in terms of strategy, do you see any change at all, especially given the Trump administration's tariffs for the next 4 years, perhaps? Will there be, a tweak in strategy, the way they look at where to invest?
I mean, my guess is they probably look to take advantage of it if some company got in trouble because, tariffs crimped it bad enough that, I can envision a situation that a company maybe had a little too much leverage, et cetera. They've got to move production somewhere, need the capital to make that happen. Those are the kind of things that Berkshire Hathaway is made for, right? Is to take advantage of dislocations and when people, hey, does it get in trouble, especially if it's a otherwise good business that maybe somebody, something went wrong, et cetera. So in that sense, I don't think that's a change. I think that's just doing what they do best.
Todd, do you see changes in terms of how the company thinks or how it is managed?
I don't know the answer to this, but I would imagine that the Ted Weschler and Todd Coombs, who both are CIOs for Berkshire, will get a lot more money to manage and to invest because Buffett's going to be out of the picture. And I think right now each one of them only has like 15 or 20 billion that they're managing. So again, I don't know. That will change under Abel, the capital allocator.
You also have to wonder how Berkshire Hathaway will look at investing in Asia. I mean, we know that Warren Buffett was among the early investors of BYD back in 2008, investing, buying 10% of a stake. Is there a perception, perhaps, that the new leadership will look at Asia differently? Bill?
I know Warren and Charlie both loved China, and they always said, and this is one thing that I repeated to people, why can't China and the United States get along? It's to both of our benefit to get along. So I don't know what else to say about that, but certainly there are a lot of opportunities over there and in, Asia, the Asia market.
I would guess that they are probably. I would guess that Warren Buffett would be more drawn. I mean, he has talked about it. Certainly, his affection for the Japanese trading houses. He talked about them at length here at the meeting this year. I do think he's probably a little less excited about China. Certainly that was more of a Charlie Munger side of the equation. I just suspect he's a little maybe more worried about. Rule of law or being able to, have the direct ownership relative. But again, it hasn't stopped him at times, like you mentioned, that BYD was really came from Charlie Munger, but he still did it. And I know he's owned some other Chinese stocks in the past, or at least one other one before.
Bill, how do you look at... Go ahead, Todd.
I was just going to say, I thought that they owned Alibaba for a while.
I don't think that was in the. I know Charlie Munger did personally, and he may have had it in the Wesco portfolio, but I don't believe it was in the Berkshire portfolio. But I could be wrong.
Well, gentlemen, thank you so much for that. Todd Winkle, author of Warren Buffett, investor, entrepreneur, also a Piggott Professor of Entrepreneurship at Gonzaga University, as well as Bill Stone, CIO at the Glenview Trust Company. Now, let's do a check on the Indian markets. Been trading for just a couple of seconds. Take a look where we are in terms of those Adani stocks in particular. Sources saying that Adani representatives met with Trump officials aiming to dismiss those criminal charges levied against Adani in overseas bribery probe there. We are seeing gains for the benchmarks in India. Adani Enterprises also in positive territory, currently down or currently up by 0.7% along with its other stocks. Adani Power trading up by 0.7%. Now, still to come, the plot twist Hollywood didn't see coming. We'll look at the impact of President Trump's plans for a You're watching Insight. President Trump says the U.S. will impose a 100% tariff on all movies produced outside America. Sources say this comes after a meeting with U.S. Special Ambassador to Hollywood, John Voight. In a post on Truth Social, Trump told his followers the process will begin immediately. Let's go to Los Angeles and bring in Bloomberg Managing Editor Lucas Shaw. Lucas, pretty left field. Where did this come from?
Well, Trump has talked, obviously, about wanting to bring production back to Hollywood. It fits in with his whole MO on the trade war, on his tariffs, where businesses that he feels are leaving this country he wants to bring back. So it's a little bit of that, and a little bit of, he's as we've reported, he spent a bunch of this weekend with the actor John Voight, his manager Stephen Paul. Voight is one of Trump's ambassadors to Hollywood who's supposed to figure this out. Now, they were proposing tax incentives to bring this back, but Trump loves tariffs, so that's what he's talking about.
The thing is, essentially what we're saying is that foreign movie production is a national security threat. I mean, how much of a basis is there for this to take place?
Not a lot. I mean, if you look at the data, the U.S. is a net exporter of entertainment, right? It produces a lot of film and television that it exports all around the world. Movie studios make more money outside of the U.S. than they do inside of it. Streaming services like Netflix make more money outside of the U.S. than inside of it. And the U.S. in general is a net exporter of film and television. So one of the concerns here is that other countries will retaliate, which would very much damage Hollywood studios. Now, the question, of course, is what does this mean? How do you put a tariff on a movie? What qualifies, right? Are we taking a movie that Disney produces, that it's filmed in London, but they finish here? Like, is that subject to tariffs? Or are we just talking about, Japanese movies that get released here? If it's the latter, it's far less concerning to Hollywood unless there is retaliation.
So still quite unclear what exactly will be impacted. We know, though, Lucas, that, when it comes to, making movies in international locations, they come with cheaper labor costs, right? The likes of Canada, the likes of New Zealand, Australia, they provide incentives for movie makers to come to the country to do business, to make movies. I mean, is that likely to go away on the back of the tariffs that we're likely to see?
Right. Well, look, again, it depends a little bit on what the tariffs are, but you make a good point, which is that the reason that production has moved outside of the U.S. is the same that a lot of industries have started to make things outside of the U.S., is that it's cheaper. I think one of the differences is that it's cheaper in part because of labor costs, but also in part because of incentives. And that is one area where it would be possible to work here, right? Whereas you could very easily say, most Americans don't want to make Nike sneakers, right? They think that they can get better jobs. Most people who work in entertainment in Hollywood would rather make their movies and television shows in the United States. They'd rather make them, oftentimes in Los Angeles, than in other parts, right? It would save them travel, it would allow them to stay at home, and the work still pays pretty well. And so the real question is, are there ways to bring that production back? Most people seem to believe that that would be creating incentives to shoot things here. I think even if you did that, you'd still have a lot of production happen outside of the U.S., but it is possible to bring more of it back. And it is worth noting that for Hollywood studios, they do still make more product in the U.S. than anywhere else.
Give us a sense of how much of the business has been lost over the last 4 years. You alluded to that social post which Trump posted prior to his inauguration, saying that he wants to bring Hollywood back because it's lost its business in the last 4 years. How much has been lost?
I think the estimates show that, look, dozens of productions have moved that are made
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, the lift in futures comes on optimism. Trade tensions may be easing between the U.S. and China. Treasury Secretary Scott Bessent and U.S. Trade Representative Jamieson Greer will hold talks with China's Vice Premier He Lifeng this weekend. The officials are due to meet in Switzerland Saturday and Sunday. These will be the first confirmed talks since President Trump announced tariffs of up to 145% on Chinese imports, and Beijing retaliated with its own levies. Here's Secretary Bessent speaking on Fox News.
I think that this is what we're going to do in Switzerland is we've agreed to talk. Then on Saturday and Sunday, we will agree what we're going to talk about. My sense is that this will be about de-escalation, not about the big trade deal. But we've got to de-escalate before we can move forward.
Treasury Secretary Scott Bessent says current tariff rates are not sustainable and amount to a trade embargo.
Just hours after the talks were announced, Nathan, China took steps to boost its economy. The country's central bank cut its policy rate and lowered the amount of cash lenders must keep in reserve. Economists say the decisions demonstrate policymakers are acting with urgency to support the world's second-largest economy in the face of the U.S.-China trade war.
Now we turn to a tense situation in South Asia. Karen, India and Pakistan traded military strikes overnight, weeks after a militant attack in the disputed Kashmir region killed 26 people. India says it hit 9 targets, calling them known terror camps. Pakistan's military says the strikes killed 26 civilians. It responded by shooting down 5 Indian jets. We get more from Bloomberg New Delhi Bureau Chief Debjit Chakraborty.
Both the sides are saying that these were de-escalatory kind of moves. India has said that it only had one thing in their mind, just to target the militants which were trying to destabilize the Kashmir region, the economic development of that part. Pakistan has always said that we won't do anything unless India attacks.
Bloomberg's Debjit Chakraborty says the last time India and Pakistan came close to all-out war was 2019, when a suicide bomber killed 40 members of India's security forces.
Joe Biden is speaking out this morning, Nathan. The former president has described the White House's approach to Russia as modern-day appeasement. Biden was asked by the BBC what he thought of President Trump's peace plans for Ukraine.
It is modern-day appeasement. Look, listen to what Putin said when he talked about going from Kyiv into Ukraine and why. He can't stand the fact that the Russian dictatorship that he runs, that the Soviet Union has collapsed. And anybody thinks he's going to stop is just foolish.
Joe Biden's interview with the British broadcaster is his first since leaving office.
And Karen, Senate Minority Leader Chuck Schumer is looking for answers after last month's incident at New Jersey's Newark Airport that left air traffic controllers out of contact with planes for 90 seconds. Transportation Secretary Sean Duffy says the air traffic control system is safe, but Schumer says he has plenty of concerns.
First, the firing of so many employees under DOGE has weakened the FAA. Second, a good number of top-level people who are concerned with air safety and flight safety have left out of exasperation because they think the people who have been put in charge don't know what they're doing.
Senate Minority Leader Chuck Schumer spoke on Bloomberg's Balance of Power. Transportation Secretary Duffy says a build-out of a new air traffic control system should be completed by the summer, but the current one has backups for pilots and controllers.
Nathan, President Trump met with Canadian Prime Minister Mark Carney in the Oval Office. The leaders showed no signs of retreating from their differences in an ongoing trade war, and Bloomberg's Amy Morris reports from Washington.
After the meeting, Prime Minister Carney says there will be more talks.
We agreed to have further conversations in the coming weeks, and we are looking forward to meeting in person at the G7 summit in Kananaskis in Alberta.
President Trump told reporters there are no firm trade deals with Canada, China, or any other country.
They don't have to sign deals. They have to sign deals with us. They want a piece of our market. We don't want a piece of their market. We don't care about their market. They want a piece of our market.
As for Canada becoming the 51st state, Carney says it'll never be for sale, but Trump told Carney, never say never. In Washington, Amy Morris, Bloomberg Radio.
All right, Amy, thank you. Turning to markets now, as investors and the Federal Reserve wait for clarity on the Trump administration's trade policies, the Fed is expected to leave interest rates unchanged this afternoon. We get a preview of the decision from Bloomberg's Michael McKee.
There's still no suspense at the Fed. Without any clear idea of who will be taxed, how much, and when, the central bank waits like everyone else for some idea of what the Trump tariffs will do to the economy. So there's little point in changing interest rates. Fed officials also don't provide new economic forecasts or a new dot plot at this meeting, which pretty much leaves Chairman Powell and his press conference as the only opportunity for headlines, which, given the circumstances, he will likely avoid as much as possible. Michael McKee, Bloomberg Radio.
All right, Mike, thanks. We'll stay with Bloomberg for full Federal Reserve coverage on a special edition of Bloomberg Surveillance. The Fed Decides. It begins at 1:30 p.m. Wall Street time on Bloomberg Radio, Bloomberg Television, and the Bloomberg Podcasts page on YouTube.
Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. The Cleveland Cavaliers had a brilliant regular season going 64-18, but they are in big trouble in round 2 of the NBA playoffs as Indiana rallied late, got a Tyrese Halliburton three-pointer with 1 second left and won 120-119. The Pacers go home up 2-0 in the series. Golden State won Game 1 at Minnesota 99-88. In the NHL, Carolina won Game 1 at Washington 2-1 in overtime, and Edmonton beat Vegas 4-2. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.
You're listening to an iHeart podcast.
और गाइस क्रूड ऑयल और नेचुरल गैस दोनों में एसएल ट्रेल कर लेना 530 होने वाला है। न्यूयॉर्क सेशन इज गोइंग टू ओपन, देखो कितना मोमेंटम आता है। क्रूड ऑयल की इन्वेंट्री भी है। 5:30 न्यूयॉर्क सेशन ओपन होगा, 7 PM यूएस मार्केट ओपन होगा एंड देन 8 PM पे क्रूड ऑयल की इन्वेंट्री और फिर शाम को 11:30 बजे एफओएमसी का रेट कट का डिसीजन। मॉर्निंग से देखोगे क्रूड ऑयल रेंज के अंदर ही है, कुछ रेंज वापस ब्रेक कर ही नहीं है। हल्का सा गैप ऊपर हुआ था, ऊपर गया वापस नीचे आ गया सपोर्ट पे, थोड़ा बहुत मोमेंटम। लेट्स सी 5090 तक जाता है तो। बाकी नेचुरल गैस को भी देखोगे तो वो भी काफ़ी ज़्यादा रेंज के अंदर ही चल रहा है। ऊपर से एक दो बार रिजेक्शन मिल चुका है तो अब नॉर्मली तो आ जाना चाहिए लॉजिकली, और लेट लगाता है तो फिर एक बार 305 को टच करने की कोशिश कर सकता है, फिर गिर सकता है। सो ट्रेल कर लेना बिफोर 5:30 लास्ट कैंडल, इसके बाद नेक्स्ट कैंडल पे मार्केट हो सकता है बड़ी कैंडल डायरेक्शनली बना दे या फिर हो सकता है अपोजिट डायरेक्शन पे आ जाए। सो डोंट रिस्क, टेक रिस्क।
The marriage of money and power is nothing new, but the arrangement between billionaire Elon Musk and President Donald Trump is like no other in the history of U.S. politics.
Come on up here, Elon.
They're buddies. That's probably a good description, at least how Elon Musk sees it. Trump views Musk partly as his bank. I mean, Musk was the biggest donor in the 2024 cycle.
People throw around the word bromance a lot these days, but let me read this tweet real quick from Elon Musk. I think it sort of speaks for itself. I love Donald Trump as much as a straight man can love another man.
It's been a crazy 100 days.
Trump has been able to get Elon Musk to help propel through all the changes that were spelled out in Project 2025, a blueprint for reshaping the government.
Starting in May, my time allocation to Doge will drop significantly.
As Musk pivots, the struggles surrounding Doge's actions continue, while many Americans are reeling from a tumultuous 100 days.
I'm not sure we've ever seen a combination of two people, dominating the news cycle as much as these two have. It's hard to keep tabs on everything that's coming out of that administration.
Our greatest primary task is to put people to work.
Taking stock of a president's first 100 days is a convention going back to the 1930s.
When Franklin Delano Roosevelt took office, he made a point of saying, look, we have a new deal coming and we are going to measure the first 100 days of progress. And it was an idea that stuck.
What he accomplished in his first 100 days was through legislation. This has been the opposite. Trump and Musk via Doge are doing a lot by executive order. There has not been a debate in Congress. All of the social programs that we think of as being part of the social safety net in the United States, Social Security, Medicare, grew out of the New Deal.
If you were to go back to what a lot of people consider America's glory days, the late 40s, the 1950s, government had a huge role in American lives.
But Doge's mission under Elon Musk is radically different from the expansive programs of post-war America.
Doge people are pretty much in every government agency conducting, an audit. That's how they would describe it. And of course, attempting to downsize the federal government.
You look around the U.S. government right now and you see friends and allies of Elon Musk in all these various departments, in all these various top leadership roles.
Many of these federal agencies are investigating parts of Musk's empire. The federal agency that regulates highways and transportation has been investigating Tesla over its autonomous vehicle technology.
We've seen the gutting of the Consumer Financial Protection Bureau, and that's an agency that has been looking into hundreds of complaints against Tesla.
X, which is the company that used to be Twitter, Elon Musk has wanted to have a payments platform. The CFPB regulates that.
Doge is accessing quite a lot of government data, which is valuable for any company, particularly for someone who is training AI at X. Which databases they actually have access to and how they are using them remains one of the big questions in Washington.
You have deep personal and financial ties to Elon Musk.
Trump's tapping of billionaire entrepreneur Jared Isaacman to lead NASA also underlines Musk's influence.
It is hard to imagine a more pro-Elon Musk head of NASA than Jared Isaacman.
Isaacman has gone to space twice himself on SpaceX rockets. NASA is a huge client of SpaceX, and so building a strong relationship with NASA is just instrumental to SpaceX's future, not only because it's literally providing revenue, but because it's carrying out Elon Musk's vision of trying to get humans to Mars.
Musk is known for his uncanny ability to play the long game. And while he seems well positioned yet again, he may not have expected so much public blowback. Polling shows an unfavorable reaction to Musk and Tesla.
It's just really this incredible backlash against a brand which for decades had incredible support.
The brand issues with Tesla right now have gotten so bad, and there's so much ill will towards Elon Musk and Tesla. There's people vandalizing cars or vandalizing Tesla showrooms.
We certainly think it's despicable, the violence that has taken place against Tesla, the company.
Tesla as a stock has long defied gravity and fundamentals, but not this past quarter, which was its worst in years.
It definitely peaked right after the election, but since inauguration, it has declined by roughly 40%.
Analyst Dan Ives says the EV maker faces a code red moment.
People are increasingly worried about the economy. The trade war has a lot of people spooked. So Tesla's sales really dropped. Their first quarter sales were 13% lower than the quarter a year ago. And a lot of that is because of Musk and his proximity to Trump. Tesla's stock and Elon's wealth basically run on parallel lines. It is important to remember that Tesla is not the only source of Elon's wealth, but whenever there's a big drop in Tesla's stock, it does impact his wealth.
His net worth may be going down, but let's not forget about all the benefits he continues to reap from being so close to the Trump administration.
This is beautiful. Whoa.
Trump and Musk were together on the White House lawn, and Trump was basically trying to help to sell Tesla cars. To just have a sitting U.S. president sort of hawk the products of one of their biggest backers was just such a spectacle.
Yet not all of the Trump administration's actions have been in Musk's favor.
I'll continue to advocate for lower tariffs rather than higher tariffs, but that's all I can do.
Musk has not criticized Trump directly, but he's gone after his top trade advisor, Peter Navarro, who he called, quote, a moron and dumber than a sack of bricks.
Tesla is faring somewhat better than other automakers in that they make their vehicles here in the United States, but they do import battery cells and other components from China, and they are not immune to tariffs.
Stop the coup!
For Republicans now, Elon Musk is emerging as an increasingly polarizing and potentially toxic figure, yet at the same time, they also need him in a way. They need him to be able to bankroll those congressional races in 2026. Donald Trump needs his fall guy, but he also needs the bulldogs, and sometimes they're the same person.
The consequences of the chainsaw Musk has taken to the U.S. government are still being measured, as well as the success and failures of Doge.
The vision was a Department of Government Efficiency that was going to cancel contracts, particularly contracts around what we know as DEI, or diversity, equity, and inclusion, and root out fraud, waste, and abuse. So, in Doge's mind, they have been wildly successful. And on the flip side, there is a cost to laying off federal workers, to fighting all of this litigation in court.
Howard Lutnick, now the Commerce Secretary, said, how much money are you going to cut from the federal budget?
Well, I think we can do at least $2 trillion.
Yeah! Recently, Elon Musk said $150 billion in cuts by fiscal year 2026. That is a huge reduction in the goal, especially when you look at the promises that were made in terms of how much fraud they're going to find. And they just haven't found that much fraud. And also, you have all this litigation. It has also, in a weird way, showed that the government does a pretty good job in a lot of areas. But I think if you ask the broader Trump movement and some of these other people who have had a big influence on what's happening, and I'm thinking here of Russell Vought, who runs the Office of Management and Budget and is really like one of the key ideological architects of Project 2025, then I think it's been a huge success.
We want to put them in trauma.
He gave these speeches in the run-up to the election, and he talked about traumatizing federal workers.
Musk has carried out these very draconian efforts and has been the public face of them and has been somewhat gleeful about it. At one point, he posted about feeding USAID into a wood chipper.
That is a audacious thing. USAID was a big part of how America projected its competence, its compassion on the world.
For better or for worse, Musk has had a huge impact on Trump's first 100 days, but his role in the next chapter of Trump's term remains to be seen.
Musk isn't really leaving the Trump administration. When you have 6 companies, each one is like basically 1 day a week. So 1 to 2 days a week is like it's still a huge amount.
It's not like Doge is ending. I mean, Doge is a project that's supposed to continue until July 2026.
One thing we've learned over this last 100 days is that there is going to be a huge cost to Elon Musk for doing the things he's doing. He has basically taken his personal brand and tarnished it. And that's what happens when you put yourself front and center of some extremely controversial and often unpopular policies.
Vodafone Business's mobile private network is helping protect critical infrastructure.
It's essential to have a secure network which is separated from outside communication. Using 5G makes the working environment safe and enhance the operational effectivity.
There are 18 very important trading relationships. We are currently negotiating with 17 of those trading partners. China, we have not engaged in negotiations with as of yet. So I expect that we can see a substantial reduction in the tariffs that we are being charged, as well as non-tariff barriers, currency manipulation, and the subsidies of both labor and capital investment. So that is proceeding very well. Many of our trading partners have approached us with very good offers, and we are in the process of renegotiating those. With the economy, I would say that this is a three-legged stool: trade, tax, and deregulation. Trade was first. The House, according to Speaker Johnson, expects to move their portion of the bill over to the Senate on or about the Memorial Day, so we're looking forward to that. And then deregulation necessarily takes longer to affect the economy, but I would expect in the third and fourth quarters, we would see substantial benefits from deregulation that by this time last year could be at full force.
EDP's 5G Living Lab is transforming a 70-year-old dam into a digital innovation hub.
Vodafone Business has deployed 5G infrastructure to transform the way we do things better, faster, more efficiently.
Half an hour away from the open of markets in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne Mann with David Ingles.
We'll get you straight now to live pictures from the Chinese capital, where officials from China's central bank, you have the Financial Regulatory Administration, and also the securities regulator also set to hold this briefing. Left side of your screens is that briefing. We're waiting for what they say, how they'll say it going into the market open today. It's quite rare, of course, that we do have a briefing before the markets open, going into a trading session.
And it all kind of was a very last-minute sort of planning, right?
Yeah.
It seems, right, that it all came together. In fact, we only found out who was attending maybe about an hour ago. Does this mean we're going to see some sort of stimulus sort of signals? And the timing of it, I think, is quite interesting. And the fact that they're bringing back the playbook, it feels like we're in September back again.
It does. And one of the very first, if not the very first line that came out when it actually began, and we're now getting officials seated there, was an announcement that they did cut the RRR.
Yeah.
So we'll see whether or not that's what they lead with as well. We'll get you more lines coming through as we wait for that as well. 28 minutes to the opening bell. Let's just briefly look at markets right now. So some strength did come through in the Chinese currency on the announcement of this briefing, and also the announcement of trade talks, which we'll get to in a moment, coming through this weekend. We're giving up some of the strength, as you can see, 720 now on dollar China. Flip the boards, please, and have a look at futures. Futures are punching higher. 162 on the 10-year yield. 159 is a level you want to watch. Just below that, that takes you back to effectively record lows on the 10-year yield. Dollar Hong Kong, 775. Very quickly, U.S. futures, risk assets, our bid havens, are taking a back seat on progress, on news flow, on trade talks taking place. Pan Gongsheng is speaking very, very quickly. Just a check on Indian futures. That's the other major story we're tracking today. Military confrontation there. And we're open right now. We plunged going into the close. We're giving back some of the weakness, a little bit higher from the cutoff right now.
Can't stress what's really, the big news of the day. I mean, there's so much going on. But there you go, the governor of the PBOC there speaking now. Let's listen in.
The high-quality development of the real economy and created a sound financial and monetary environment for the sustained recovery and growth of the economy.
First of all, since the beginning of this year, the various macro financial data are performing rather well in terms of money and credit. The numbers are up, prices down, and structures are improved. That's the general trend. At the end of Q1, aggregate financing grew 8.4% year-on-year, loans up 7.4% year-on-year. But if you exclude the factor of local government special bond replacement program, then the year-on-year growth of loans was over 8%. Broad money supply, or M2, continued its steady growth at around 7%, markedly higher than the growth of nominal economic growth. Social financing cost remains low. Inclusive loans to micro and small enterprises, mid to long-term loans to manufacturing, and loans to sci-tech SMEs grow faster than average, and the structure of credit continues to improve. The financial market had positive performance in Q1. The stock market operated steadily with vibrant transactions. Shanghai Composite Index kept at around 3,300. The bond market carried out self-rectification because of boosting economic confidence, and onshore and offshore RMB exchange rate against the US dollar appreciated a little bit by around 1% from the end of last year. Since the beginning of April, despite strong external shocks, our financial system remains robust, and the financial market demonstrated strong resilience. The Shanghai Composite Index, after its decline on April the 7th, bounced back and stabilized, and the 10-year Treasury bond yield hovered at for around 1.65%. RMB exchange rate against the US dollar, after slight depreciation, came back to around 7.23 yuan. Global economy now is filled with uncertainty, heightened economic fragmentation, and trade tensions, which disrupted global industrial and supply chains and triggered turbulence in the financial markets, and also weakened the momentum for global growth. A while ago, I was in Washington, D.C. for the spring meeting of the IMF and World Bank. At the meeting, central bankers and heads of international organizations expressed concern over this. PBC will carefully implement the decisions and instructions of the CPC Central Committee, promote high-quality economic development, promote high-level opening up, and actively participate in international financial governance and cooperation, and safeguard the rules-based international economic and financial order. At the same time, we will work both in terms of the opening up and the security of the financial sector, explore the central bank's role in macroprudential management and financial stability, and keep China's Forex, bond and stock markets stable. In order to implement the requirements of the April 25th Political Bureau meeting, which gave a detailed analysis of the current economic situation, continue to implement the appropriately accommodative monetary policy, and promote high-quality economic development. The PBC will intensify macro regulation and roll out 10 measures in 3 categories as a package. First, quantitative policies through RRR cuts. We will increase mid to long-term liquidity supply to keep ample liquidity on the market. Second, price policies. We will lower policy interest rate and the interest rates of structural monetary policy instruments, which is the interest rates paid by commercial banks to central banks through reloan programs. And we will adjust and cut provident fund loan interest rates. And third, structural policies. We will create and implement the structural monetary policy instruments to support sci-tech innovation, boosting consumption and inclusive finance. So in total, in these 3 categories, there are 10 specific measures. First, lower the RRR by 0.5 percentage points, which will release around 1 trillion yuan of long-term liquidity to the market. Second, improve the RRR system. We will incrementally lower the RRR for automobile finance companies and financial lease companies from the current 5% to 0%. Third, we will lower the policy interest rate by 0.1 percentage point, which means to lower the open market 7-day reverse repos interest rate from the current 1.5% to 1.4%, which is estimated to drive LPR down by around 0.1 percentage point. Fourth, lower the interest rates of structural monetary policy instruments by 0.25 percentage points, which includes the interest rates of various special purpose structural facilities, the relending to support agriculture and small and micro enterprises, which will be brought down from the current 1.75% to 1.5%. These are funds provided by the central bank to commercial banks. And the interest rate of PSL will be brought down from 2.25% to 2%. PSL is provided by central banks to commercial banks. Fifth, cut the interest rate for provident fund loans by 0.25 percentage points. The 5-year loan interest rate of first homes will be brought down from 2.85% to 2.6%, and the interest rate of other mortgages will be adjusted accordingly. Sixth, we will add 300 billion yuan of real loans to support sci-tech innovation and technological transformation. That will bring the current 500 billion to 800 billion yuan, which will continue to support the policy of large-scale equipment upgrading and consumer goods trading programs. Seventh, we will establish a real lending facility for services, consumption, and elderly care, totaling 500 billion yuan. Eighth, we will add 300 billion yuan of real loans to support agriculture and micro and small enterprises, and synergize with the policies of cutting relevant facility interest rates, which will support banks in expanding their credit issuance to agriculture, small and micro enterprises, and private enterprises. Ninth, we will improve the two monetary policy instruments supporting the financial markets, which means we will combine the 500 billion yuan swap facility for securities, funds, and insurance companies, and the 300 billion yuan real loan program to support share buybacks and increased holdings. That will bring the total volume to 800 billion yuan. 10th, we will create a sci-tech innovation bond risk sharing facility. The central bank will provide low-cost real loan funds, which can be used to buy sci-tech innovation bonds, and together with local governments and market-based credit enhancement institutions, and through diverse credit enhancement measures such as joint guarantee to share the default loss risks of bonds. We will support sci-tech innovation companies and equity investment institutions in issuing low-cost, long-term sci-tech innovation bonds financing. All these 10 measures will be published on the website of the PBC, and we will implement them. Going forward, the PBC will continue to follow the instructions of the CPC Central Committee and the State Council, implement the appropriately accommodative monetary policy, and in light of the domestic and international financial and economic situations and financial markets, continue our monetary policy regulation and strengthen our coordination and synergy with fiscal policies and promote high-quality development of the economy. Thank you. Thank you for opening remarks. We now invite our next speaker.
Friends from the media, good morning. It's a great pleasure to meet you again and take your questions. First, on behalf of the NFRA, I wish to thank you for your long-term support for our work in the financial regulatory sector. Since the beginning of this year, the NFRA has honestly implemented the decisions and instructions by the Party Central Committee and State Council, implemented the guidance principles of the April 25th Politburo Conference. Keeping in mind the worst scenarios, we have stepped up and expanded policy measures, actively responded to external impacts, and our work has made solid progress. First, the financial operation has remained generally stable. Currently, the businesses of banking and insurance institutions are carried out in an orderly way. Major regulatory indicators remain in a healthy range. Large financial institutions are stable, playing a significant role as stabilizers. The reform and risk diffusing of small and medium financial institutions have made important progress. From the first 4 months of this year, the capital adequacy ratio of banks and the solvency ratio of interest companies remained stable. The non-performing loan ratio dropped by 0.1 percentage point, and provision coverage ratio grew by 10 percentage points year-on-year. It could be said that the safety cushion has become thicker. Second, the regulatory policies continue to take effect. We have strengthened the guiding role of regulation, accelerated regulatory system improvement, and revised and adopted systems in terms of corporate governance, regulatory rating, and consumer protection. We have formulated opinions on the high-quality development of the banking, insurance, and asset management industries, and enhanced the professionalized and specialized development capability. We have guided the industry to further reduce cost and improve efficiency, improved capital replenishment mechanisms, and in terms of large commercial banks, the capital replenish are picking up speed, and major insurance companies are on the agenda. These measures will further enhance the resilience of the financial system and the capability to serve high-quality development. Third, quality and effectiveness have been enhanced. We have formulated special implementation plans on the major areas of finance and adopted financial policies supporting consumption and foreign trade, and step up our support to major areas and equipment upgrading and consumer goods trading programs. For the first 4 months, banking and insurance industries have provided the real economy with additional financing of 17 trillion yuan. The loan renewal without principal repayment has altogether provided renewal of loans 4.4 trillion yuan since last September. Short-term export credit insurance has increased its coverage amount by 15.3%, providing strong support for stabilizing foreign trade. For the first 4 months, the payout of insurance was 1 trillion yuan, and the car insurances for new energy vehicles covered more than 10 million cars, and at the same time, the long-term reserve have exceeded 10 trillion in terms of elderly care and health insurance. Next, we will follow the instructions of the Party Central Committee and the State Council, increase the sense of responsibility, urgency, and initiative, step up efforts to implement the existing policies, and step up efforts to roll out additional policies to further cement the fundamentals of economic recovery. Recently, we will roll out the following 8 additional policies. First, a series of financing system that is commensurate with the new development model of the housing sector to facilitate the stabilizing of the housing sector. Second, we'll further expand the pilot of long-term investment of insurance funds to increase more funds for the market. Third, adjust and improve the regulatory rules and lower the risks of insurance funds investments. Support efforts to stabilize and activate the capital market. Fourth, we will accelerate the rolling out of package policies supporting micro and small enterprises and private sector financing, substantiate the working mechanism to help stabilize enterprises and the economy. Fifth, we'll roll out a series of measures to support the banking and insurance industries. For entities affected by tariffs, we will provide targeted service to help them with operation and exploration of market. Sixth, merger loans management rules will be rolled out. And seventh, we will extend the entities that launch financial asset investment companies to eligible nationwide commercial banks and support investment to SDI companies. And eighth, formulate opinions on the high-quality development of sci-tech insurance, better leverage the role of insurance, of risk sharing and compensation. Thank you. Thank you, Minister Li. Now I give the floor to Mr. Wu Qing.
女士们、先生们，
Ladies and gentlemen, friends from media, good morning. First of all, I'd like to say thank you to your support and long-term support and attention for the work of China Security Regulatory Commission, CSRC, and capital market. I have to say, your understanding and support is very important for us. Since last year, we have been implementing the plans and decisions of Party Central Committee and State Council, implement the new 9 guidelines and a series of policy frameworks. The momentum of the market is good now. Since the beginning of April, the U.S. government's tariff policy has impacted the economic and trade order of the world, brought turbulence to international financial market, which give us pressure to domestic financial market, facing the sudden and severe challenge under the able leadership of Central Committee, State Council, and the coordination of Central Financial Commission. We made swift action with relevant authority and introduced coordinated measures from the perspective of Capital Fund and expectations, including the People's Bank of China, State of Asset Supervision Administration Commission, and State Administration of Foreign Exchanges has released strong policy signals. The Central Huijin Investment Limited galvanized into action Social Security Fund, Security Investment Fund, institutions of bank and insurers and all kinds of other investors has consolidated their confidence and bought in more stocks, and a lot of listed companies repurchased shares and increased the equity stake to maintain the stability of the stock price. With the common effort of the participants, of investors and entities of market, the China A index has experienced a short period of turbulence, which is just 1 day, and then it rebounded and gained good momentum and demonstrated strong resilience and capability of risk resistance. In the April 25 Central Political Bureau meeting has emphasized on maintaining the stability and vitality of the capital market, which embodies Central Committee's expectations to our work in stabilizing the market, and we will unswervingly manage our country's own affairs well, ensuring stability in the operation of market, as well as to make progress in stimulating the vitality of the market and making the market assume its role. The first is to consolidate the good momentum of the market, enhance the monitoring supervision of the market, and the comprehensive judgment of the risk, dynamically enhance our work plans against the external shocks, and support the Central Huijin Investment Limited to assume its role in stabilizing the fund. It's safe to say that the Huijin Investment Limited is galvanizing into action in the front, while the People's Bank of China is supporting in the back. And this is the most able, it can be said that this is the most able institution in the world when it comes to finance. Also, we will work with the PBC to improve the capital market monetary policy instruments long-term mechanism to make all the entities of a market to assume their role in stabilizing the market. Second is put focus on new quality productive forces. Recently, we will introduce deepening reform measures and policies. We will introduce the policy and measures for deepening reform of this sci-tech innovation board and growth enterprise market, and enhance the adaptiveness and inclusiveness of the market structure review mechanism and investor protection. Second is to introduce a newly revised listed company material assets restructuring management plan, and regulatory guidance comes with that to make the capital market as a main channel for M&A and restructuring. Third one is to make effort in the development of sci-tech innovation bonds, improve the issuance and register procedure, improve credit enhancement support to provide all-around financial services for the sci-tech innovation corporations. The third point is to facilitate the mid and long-term investment. On the one hand, continue the returns must be ensured and continue to improve the listed company's governance and improvement of performance and cultivate the culture of returning the return to the investors and implement the action plan for promotion of the high-quality development of public mutual fund, which will be released today to embody the connection between the investors and the management companies to form a more returns, more investment, and more stable market cycle. The stability of the stock market is about the economy and society, as well as millions of investors' personal interest. Currently, the good momentum of our economy is being consolidated, and we are fully prepared in terms of policy when it comes to cope with the external shocks. Just now, Mr. Pan and Mr. Li has already introduced some policies, and we can see from that we are prepared. We will inject more certainties to a world of uncertainty, which created solid foundation and condition for our capital markets' stable operation. As for the capital markets, our confidence mainly comes from four aspects. The first one is the able leadership and resolute determination for maintaining stability of the market of the Central Committee and the State Council. This is not just a slogan. We have all witnessed the solid and concrete actions being made, as well as the results, tangible results. The second aspect is 1+M policy framework's implementation, which facilitated a positive and deep change in the market structure. A coordinated market ecosystem of fundraising and investment is being formed in an accelerated manner. The third aspect is the narrative, sci-tech narrative of the China A index is becoming more clear. The potential of the new quality productive forces is being demonstrated. Innovation of science and technology and the industry will provide more valuable sources of development for the capital market. Fourth aspect is that the China A index is still being underestimated according to the financial industry, such as the Shanghai and Shenzhen 300 index.
If the trailing SL is gone in crude oil exit 530 ऑलरेडी हो चुका है, अब सीधा यूएस मार्केट ही ओपन होगा. क्रूड ऑयल की इन्वेंट्री भी है, ज़्यादा मूव नहीं आता है तो फिर इन्वेंट्री पर ही मूव करेगा मार्केट. सपोर्ट था, थोड़ी बहुत बाइंग आई, थोड़ा सा ऊपर आता तो यहाँ से वापस सेल कर देते, बट एग्जैक्ट लेवल पे आया नहीं, तो ये छोटा सा ही टारगेट मिला कह सकते हैं. नहीं नहीं, नेचुरल गैस में भी नहीं कर सकते। वो 530 कैंडल ओपन इक्वल टू लो बनी थी, इसका चला गया था, जितना आना था चला गया। लेट्स सी वापस से कोई नया ट्रेड बनता है तो। नैस्डैक में प्राइस एक्शन काम नहीं कर रहा। नैस्डैक को छोड़ दो, गोल्ड में ट्रेड कर लो। गोल्ड भी फॉरेक्स में अच्छा ट्रेड दे रहा है। गोल्ड इज ऑल्सो गुड। फ्रेश ट्रेड बनेगा नेचुरल गैस में लगा लूंगा, अब इसमें मत लेना दोबारा एंट्री। इसमें भी ट्रेलिंग एसएल जा चुका है। 5 पॉइंट गिरा, उसके बाद थोड़ा और गिरता तो बेटर था, 10 पॉइंट मिल जाते, बट ठीक है। वापस ट्रेड बनेगा तो वापस बना लेंगे। बाकी अब यूएस मार्केट ओपन होगा, अगर मोमेंटम नहीं आता मोस्टली तो फिर वहां देखेंगे। शाम को एफओएमसी की मीटिंग भी है, उसका भी एक इम्पैक्ट मार्केट पे पड़ सकता है डेफिनेटली। कल इंडियन मार्केट पे, आज फॉरेक्स मार्केट पे अब पड़ेगा। ठीक है, देखते हैं नेचुरल गैस अगर थोड़ा सा अगर कहीं 313 या 12 के आसपास आ जाता है, वहां पर देखेंगे वापस सेलिंग के लिए। मुझे भी लगता है सपोर्ट ब्रेक होता है तो देखते हैं। यहाँ से वापस सेलिंग का प्लान था, थोड़े से रह गया, कोई नहीं। Raman Synergy, I'm good, I'm good. आपका साउंड लो है, न्यूज़ का साउंड हाई है। न्यूज़ तो चल ही नहीं, न्यूज़ तो बंद हो गई होगी। न्यूज़ चल रही है क्या अभी भी? न्यूज़ साउंड इज गॉन। लेट्स चेक वंस अगेन। न्यूज़ की साउंड चली गई है शायद, आई थिंक। कंफर्म कर लो एक बार, न्यूज़ तो नहीं आ रही होगी। जब न्यूज़ चलती है तो साउंड हाई होता है। अच्छा, न्यूज़ चलती है तो साउंड हाई होता है। अब सही है, नाउ इट इज़ गुड। क्रूड ऑयल को सेल करें? नहीं नहीं, सेल थोड़ा सा रह गया। यहाँ पर से एक सेलिंग का ट्रेड था, वो निकल गया। एक बाइंग का ट्रेड बना था छोटा सा, फिर उसके बाद न्यूयॉर्क सेशन ओपन हो गया, उसका थोड़ा वॉलेटिलिटी बढ़ गई मार्केट में। अब नहीं। गोल्ड और सिल्वर का व्यू, लेट्स सी। गोल्ड और सिल्वर, वैसे आज एफओएमसी की मीटिंग है तो मुझे लगता नहीं कुछ ज़्यादा मूव होगा गोल्ड और सिल्वर में। उससे पहले पोजीशन अगर बनती है तभी हो सकता है। एक बार फिर भी देख लेते हैं गोल्ड और सिल्वर को। क्रूड में क्या करें, अभी तो कोई ट्रेड नहीं है कि ट्रेड बना था छोटा सा बाइंग का, थोड़ा सा ऊपर आता तो सेलिंग कर देते। अभी फ़िलहाल के लिए बीच में तो एंट्री नहीं कर सकते अब। लेट्स सी फिर से कोई नया ट्रेड बनता है तो लगा दूंगा मैं, ट्रेड बनेगा तो वहाँ पर। एक बार गोल्ड और सिल्वर को पहले देख लेते हैं। कैंडल भी ओपन इक्वल टू हाई है, बिल्कुल है। गोल्ड को अगर देखोगे 15 मिनट टाइम फ्रेम पे, मैं फॉरेक्स गोल्ड की बात कर रहा हूँ, बिल्कुल साइडवेज है। मॉर्निंग से कुछ मोमेंटम हुआ नहीं है, रेंज बाउंड ही चल रहा है। तो मुझे लगता नहीं, 7 PM का वेट कर लो, उसके बाद देख लेना, अगर मोमेंटम होता है तो उसके बाद ही होगा, क्योंकि आज वैसे भी एफओएमसी की मीटिंग है, तो ये नॉर्मली थोड़ा साइडवेज ही रहता है उसके आसपास उस दिन। अभी साइडवेज ही है, बिल्कुल साइडवेज है गोल्ड, रेंज बाउंड कह सकते हैं कम्प्लीटली। तो मेरे अकॉर्डिंग तो 7 PM के बाद ही ट्रेड करना। अभी कोई ट्रेड है भी नहीं वहाँ पर, बन भी नहीं रहा है। ये दोनों ही है, एफओएमसी मीटिंग भी है, फेड रेट कट भी है। ठीक है, 11:30 पे पहले फेड रेट कट का डिसीजन आएगा, उसके बाद मीटिंग या उनका स्टेटमेंट कह सकते हो, फिर उसके बाद प्रेस कॉन्फ्रेंस, जिसको मैं मीटिंग कह रहा हूँ बाय द वे। गिफ्ट निफ्टी ओपन रहेगा, गिफ्ट निफ्टी तो ओपन है। गिफ्ट निफ्टी इम्पैक्ट करेगा को। क्लोजिंग तो थोड़ा सा गैप डाउन के बाद वो पहली कैंडल ही फ्यूचर में बैंक निफ्टी में क्या स्ट्रांग बनी थी, तो क्लोजिंग तो पॉजिटिव हुई है। देखते हैं इम्पैक्ट, जहाँ तक मुझे लग रहा है रेट कट होगा तो नहीं, वेरी रेयर चांसेस कि रेट कट करेंगे वो लोग, तो इतना कोई मेजर इम्पैक्ट तो नहीं पड़ना चाहिए गिफ्ट निफ्टी में। बाकी लेट्स सी, देखते हैं, हम अभी कैसे कह नहीं सकते एग्जैक्टली exactly। रेट कट नहीं हुआ तो इतना इम्पैक्ट होगा नहीं, मेनली जो लास्ट टाइम उनके प्रेसिडेंट ने कहा था कि रेट कट करना चाहिए फेड को, तो उसका अगर प्रेशर रहा तभी हो सकता है रेट कट करे फेड। बाकी सिर्फ मार्केट, स्टॉक मार्केट को संभालने के लिए रेट कट नहीं करेंगे, ऐसा उनका स्टेटमेंट था लास्ट टाइम जब उनके साथ प्रेस कॉन्फ्रेंस हुई थी। लेट्स सी इसको कितना प्रॉपरली देखते हैं लोग। गिर सकता है उस केस में गोल्ड सिल्वर, बट अभी वही है, लाइक रेट कट होगा नहीं होगा, और उससे पहले ही कहीं मार्केट को ना गिरा दें, और फिर जब सब रेट कट नहीं हुआ, सब सेल कर रहे होंगे और खुद खरीद लें, ये भी कर सकते हैं, कई बार ऐसा भी होता है।
Demand, the travel data looks pretty good.
कि पाकिस्तान पे जो इंडिया ने अटैक लॉन्च किया है, लेट्स सी उसकी अपडेट. अगर पाकिस्तान रिटेलिएट करता है तो उसका भी इम्पैक्ट हो सकता है कल मार्केट पे.
News when you want it with Bloomberg News Now. I'm Karen Moscow. U.S. stock index futures are on the rise this morning. The dollar snapping 3 days of declines as China and the U.S. prepare to hold their first confirmed trade talks since President Trump unleashed his global tariff war. Treasury Secretary Scott Bessent says both he and U.S. Trade Representative Jameson Greer will begin those trade talks with China this weekend as they all happen to be in Switzerland. Bloomberg Government's Jack Fitzpatrick has more from Washington.
The outline for this, I guess you could say, by the Treasury Secretary is that rather than going for one big deal, the important thing is de-escalation. He said on Fox News, we've got to de-escalate before we move forward. They're looking for fair trade, but they're not trying to go into this with the expectation of a holistic deal with China.
Bloomberg Government's Jack Fitzpatrick. Ahead of those talks, China cut its policy rate and the amount of cash that banks need to keep in reserve. Tensions are escalating between India and Pakistan. India says it struck 9 known terror camps overnight in retaliation for a militant attack in Kashmir last month that killed 26 people. And now Pakistan is responding, as we hear from Bloomberg's Ruchi Bhatia in New Delhi.
We got a statement from Prime Minister Shehbaz Sharif's office, who said that he has given a go-ahead to the Pakistan army, and they are ready to act against India. And this after India said that they had conducted military strikes in Pakistan and Pakistan-administered Kashmir.
And that's Bloomberg's Ruchi Bhatia in New Delhi. Pakistan says the strikes in its territory killed 26 civilians. It says it shot down 5 Indian fighter jets. We're just hours away from the Fed's May decision. Jay Powell and company are widely expected to keep interest rates on hold. Ellen Zentner is chief U.S. economist at Morgan Stanley.
The consensus is pretty solid that there's really nothing for the Fed to do here. And so what does Chair Powell want to say about the future? He's already said that they're going to approach things carefully. They know that a surge in inflation is coming. They suspect that soft indicators suggest the labor market is weakening, even though the job counts are still high. And so there's just a lot of uncertainty.
Morgan Stanley chief U.S. economist Ellen Zentner joined Bloomberg Daybreak ahead of today's decision. That's set for 2 p.m. Wall Street time. Our coverage begins at 1:30 with a special edition of Bloomberg Surveillance. The Fed Decides on Bloomberg Radio, Bloomberg Television, and the Bloomberg Podcast page on YouTube. Senate Minority Leader Chuck Schumer is looking for answers. This after last month's incident at New Jersey's Newark Airport that left air traffic controllers out of contact with planes for 90 seconds. Transportation Secretary Sean Duffy says the air traffic control system is safe, but Schumer says he has plenty of concerns.
First, the firing of so many employees under Doge has weakened the FAA. Second, a good number of top-level people who are concerned with air safety and flight safety have left out of exasperation because they think the people who have been put in charge don't know what they're doing.
Senate Minority Leader Chuck Schumer speaking on Bloomberg's Balance of Power. Transportation Secretary Duffy says a build-out of a new air traffic control system should be completed by the summer. If you are flying anywhere, you will need to have your Real ID with you beginning today. Real ID requirements for those flying within the United States begin today after more than 20 years of delays. Disney shares jumping after it brought the magic again in its latest earnings. We get more with Bloomberg's Valerie Teitel.
They raised their profit outlook for the full year. They also came in with a beat on earnings per share at $145 versus estimates of $120. Saw a modest increase in Disney Plus and Hulu subscribers, but the company expects a full-year fiscal 2025 earnings outlook to rise 16% now, driven by faster than expected growth at its park and in its streaming business.
And that's Bloomberg's Valerie Teitel. And Disney also announced it'll launch its first Middle East theme park in Abu Dhabi. 133 cardinals are beginning the centuries-old ritual to elect a successor to Pope Francis. They celebrated a morning mass before opening the most geographically diverse conclave in the faith's 2,000-year history. Mortgage applications for both home purchases and refinancing increased for the first time in 4 weeks. It was helped by a slight decline in financing costs. The contract rate on a 30-year mortgage fell 5 basis points to 6.84%, and the week that ended May 2nd. And again, futures, they're higher this morning as China and the U.S. prepare to hold their first confirmed trade talks. S&P futures, they are up 1/3%. Dow futures up 0.5%. NASDAQ futures up 0.25%. 10-year Treasury yield at 4.31%. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
Because of boosting economic confidence, and onshore and offshore RMB exchange rate against the US dollar appreciated a little bit by around 1% from the end of last year. Since the beginning of April, despite strong external shocks, our financial system remained robust and the financial market demonstrated strong resilience. The Shanghai Composite Index, after its decline on April the 7th, bounced back and stabilized, and the 10-year Treasury bond yield hovered at for around 1.65%. RMB exchange rate against the US dollar, after slight depreciation, came back to around 7.23 yuan. Global economy now is filled with uncertainty, heightened economic fragmentation, and trade tensions, which disrupted global industrial and supply chains and triggered turbulence in the financial markets, and also weakened the momentum for global growth. A while ago, I was in Washington, D.C. for the spring meeting of the IMF and World Bank. At the meeting, central bankers and heads of international organizations expressed concern over this. The PBC will carefully implement the decisions and instructions of the CPC Central Committee, promote high-quality economic development, promote high-level opening up, and actively participate in international financial governance and cooperation, and safeguard the rules-based international economic and financial order. At the same time, we will work both in terms of the opening up and the security of the financial sector, explore the central bank's role in macroprudential management and financial stability, and keep China's Forex, bond and stock markets stable in order to implement the requirements of the April 25th Political Bureau meeting, which gave a detailed analysis of the current economic situation, continue to implement the appropriately accommodative monetary policy, and promote high-quality economic development. The PBC will intensify macro regulation and roll out 10 measures in 3 categories as a package. First, quantitative policies. Through RRR cuts, we will increase mid to long-term liquidity supply to keep ample liquidity on the market. Second, price policies. We will lower policy interest rate and the interest rates of structural monetary policy instruments, which is the interest rates paid by commercial banks to central banks through reloan programs. And we will adjust and cut provident fund loan interest rates. And third, structural policies. We will create and implement the structural monetary policy instruments to support sci-tech innovation, boosting consumption and inclusive finance. So in total, in these 3 categories, there are 10 specific measures. First, lower the RRR by 0.5 percentage points, which will release around 1 trillion yuan of long-term liquidity to the market. Second, improve the RRR system. We will incrementally lower the RRR for automobile finance companies and financial lease companies from the current 5% to 0%. Third, We will lower the policy interest rate by 0.1 percentage point, which means to lower the open market 7-day reverse repos interest rate from the current 1.5% to 1.4%, which is estimated to drive LPR down by around 0.1 percentage point. Fourth, lower the interest rates of structural monetary policy instruments by 0.25 percentage points, which includes the interest rates of various special purpose structural facilities, the relending to support agriculture and small and micro enterprises, which will be brought down from the current 1.75% to 1.5%. These are funds provided by the central bank to commercial banks. And the interest rate of PSL will be brought down from 2.25% to 2%. PSL is provided by central banks to commercial banks. Fifth, cut the interest rate for provident fund loans by 0.25 percentage points. The 5-year loan interest rate of first homes will be brought down from 2.85% to 2.6%, and the interest rate of other mortgages will be adjusted accordingly. Sixth, we will add 300 billion yuan of real loans to support sci-tech innovation and technological transformation. That will bring the current 500 billion to 800 billion yuan, which will continue to support the policy of large-scale equipment upgrading and consumer goods trading programs. Seventh, we will establish a relending facility for services, consumption, and elderly care, totaling 500 billion yuan. Eighth, we will add 300 billion yuan of real loans to support agriculture and micro and small enterprises, and synergize with the policies of cutting relevant facility interest rates, which will support banks in expanding their credit issuance to agriculture, small and micro enterprises, and private enterprises. Ninth, we will improve the two monetary policy instruments supporting the financial markets, which means we will combine the 500 billion yuan swap facility for securities, funds, and insurance companies, and the 300 billion yuan real loan program to support share buybacks and increased holdings. That will bring the total volume to 800 billion yuan. 10th, we will create a sci-tech innovation bond risk sharing facility. The central bank will provide low-cost real loan funds, which can be used to buy sci-tech innovation bonds, and together with local governments and market-based credit enhancement institutions, and through diverse credit enhancement measures such as joint guarantee to share the default loss risks of bonds. We will support sci-tech innovation companies and equity investment institutions in issuing low-cost, long-term sci-tech innovation bonds financing. All these 10 measures will be published on the website of the PBC, and we will implement them. Going forward, the PBC will continue to follow the instructions of the CPC Central Committee and the State Council, implement the appropriately accommodative monetary policy, and in light of the domestic and international financial and economic situations and financial markets, continue our monetary policy regulation and strengthen our coordination and synergy with fiscal policies and promote high-quality development of the economy. Thank you. Thank you for opening remarks. We now invite our next speaker.
Friends from the media, good morning.
Well, Coca-Cola and Pepsi's decades-long dominance in India is under threat from a 12-cent cola bagged by India's richest man. Reliant on industry's Coca-Cola has achieved double-digit market share in key regions barely 2 years after its relaunch.
Half an hour away from the open of markets in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne Mann with David Glass.
We'll get you straight now to live pictures from the Chinese capital
in India.
Mukesh Ambani, in Asia's richest man, has challenged the dominance of Coca-Cola and Pepsi in India by a strategy he's used across sectors that he's present in, which is through a disruptive pricing. He offers a 200 milliliter bottle for 10 rupees, which is about 12 cents. That's roughly half of what Coca-Cola and Pepsi charge for similar sized bottles. And that's essentially brought in double-digit market share for the giant in the 2 years that he's been present in the India market. Industry experts say that Coca-Cola and Pepsi's Reliance's growth has come from Coca-Cola and Pepsi, and that some market expansion might have also happened because of the low pricing that Reliance brings in.
We know that India has more than 1 billion people. It is going to be a very important market for the two cola giants.
Definitely. India is becoming a strategic market for both cola giants, Coca-Cola and Pepsi, partly because of the slowdown that it's seeing in its primary markets in the US, be it due to the presence of GLP-1 drugs, be it due to consumer pullback, or due to tariff-related headwinds that have led to Pepsi cutting down its guidance for the year. So for both these consumer companies, which continue to see growth even as Ambani's presence comes in, they're going to be focusing heavily on the India market. For Coca-Cola, India is their 5th largest market so far.
So, Vicky, talk to us about Reliance's strategy. Is it the same strategy it brought to telecoms and media to the cola business?
Definitely. It's the exact same strategy that Ambani has been using across his industries. In 2016, it disrupted the telecom sector with the entry of Jio, which essentially offered free data to billions of Indians, right? And it's now disrupted the media industry with the entry of Jio Hotstar, which is essentially a rival to Netflix and Amazon. So here they're disrupting the market with a very cheaply priced cola. And India, which is a very low disposable income economy, 12 cents can mean a make-or-break difference for most of its consumers. That's also caused, Reliance's entry has also caused some of its rivals, including Coca-Cola and Pepsi, to either cut prices or to bring in similarly priced newer variants so that they can also get in on the game at 10 rupees or 12 cents. Some of its rival companies in India have had to readjust their retail network and as well as build more chilling equipment. So industry insiders also see Reliance's entry, Ambani's entry as pushing the market to grow further.
How far is Pakistan willing to go here?
It all depends upon this. This has been initiated by India. If India is ready to back down, they have taken the initiative. We have just responded. We have been saying all along in the last fortnight that we'll never initiate anything hostile towards India. But if we are attacked, we'll respond. If India backs down, we will definitely wrap up these things, But as long we are under attack, under fire, we have to respond. We have to defend ourselves.
Mm-hmm. Minister, is there any contact between yourself and the Indian side at the moment?
I'm not aware of it, I'm not aware of it. If there is contact normally during these hostile, activities and tensions, there are backdoor contacts available anywhere in the world. There is, but I'm not aware of any contact between India and Pakistan at the moment.
Pakistan now saying it shot down 5 Indian airplanes and destroyed multiple Indian checkpoints in retaliation to Indian
EDP's 5G Living Lab is transforming a 70-year-old dam into a digital innovation hub.
Vodafone Business has deployed 5G infrastructure to transform the way we do things better, faster, more efficiently.
And joining me now, Apollo CEO and co-founder Mark Rowan. And what a time to be speaking with you.
Just a few things going on.
A few things going on, but a lot today alone. We have the Treasury Secretary speaking at 8 o'clock here Pacific time. We had Elon Musk speaking last night, and the President of the United States changing his tune on tariffs. Where do you think the end game is, given that the tariff talk is taking up so much of the discussion here?
Look, what the administration wants to do, in my opinion, is not wrong. We are the freest trading country in the world and have been since the end of World War II. It is not clear to me that we have to be, or that we should allow allies and strategic competitors to inhibit our access to their markets. We can take issue with how it's being done and the uncertainty it's creating, but the President and the administration start with a really strong hand. Low unemployment, good job growth, massive capital investment over the last 4 years and continuing in the U.S. So now is actually a good time, but we have uncertainty. And in the face of uncertainty, people do not make new investments, they do not hire, they do not make moves. We likely will cause 2 quarters of negative growth if we, in fact, don't resolve the uncertainty. So until we have resolution of what the rules of the game are, it's going to be slow.
A lot of people talk about the potential for a recession, but little are people talking about the severity that could exist in the potential for a recession.
Look, now we're talking about forecasts and projections. In our firm, when we were raising rates 300 and 400 basis points, we talked about a non-recession recession, which is a correction in asset prices, but not necessarily in labor. We kind of see the same thing happening again. It's not to say we won't have some fallout and some adjustment, but we're starting from a place of 4% unemployment, good job growth. We are building infrastructure. We're building semiconductor plants. We're absorbing massive amounts of foreign direct investment. Like it or not, we're building Inflation Reduction Act factories. And now the president is channeling capital from around the world to come back here. Some days I wake up and worry about capital. Most days I wake up and worry about where will we get all the people to do this.
Now, you mentioned that you agree with what he's doing, but maybe not how in all the ways. To the extent that you think that this should be done differently, to the extent that you don't like the method of the change, what needs to change?
Look, this is now the toughest job in the world is now Scott Bessent. As I said, we want this administration to succeed. Every American should want this administration to succeed. So how I would do it is not really relevant. I will point out the following. U.S. and Mexico together should be the driving economic force in the world for the next 50 years. We have not been able to get there, despite 2 or 3 rounds of massive free trade agreements. The issues that separate us from Mexico are not existential to Mexico. As one leading Mexican industrialist said to me, if it takes tariffs to make Mexico great again, so be it. Inside of Mexico, there's a need for change. Imagine coming to the world with Mexico and Canada resolved first, and then taking people piece by piece or country by country. We would just be in a much stronger position to do what we need to do to reset the terms of trade.
But in the meantime, you had mentioned it as well, that people are on hold. Businesses are on hold. A lot of businesses are at risk of layoffs if this continues. How long can this uncertainty continue without causing much greater damage?
Look, we're going to have uncertainty. We have uncertainty already. Until we see critical mass of trading partners agree to ongoing new economic relationships, we're going to have uncertainty.
But that could take years, couldn't it?
That could take years. I don't think the administration will allow it to take years. Clearly, what they are trying to do is to create positive momentum by getting country after country to agree to new terms of trade. If that happens, this could be very short-lived. If it doesn't happen, uncertainty could continue for a period of time. But we also have to take into account short-term and long-term. Uncertainty will eventually resolve itself. Longer term, the way we've done this, we have done damage to the U.S. brand, the brand for stability, for predictability, for regularity. That will eventually have some cost to us. Right now, it does not. What I've said is I see us moving from what was hyper-exceptionalism to merely exceptional, because I don't think there are good alternatives to the U.S. today. but that can change over time.
Let's talk more about the U.S. brand for a moment, because you have businesses across the globe, from Europe to Japan. Now, what are they saying? What are your investors in different regions saying about their willingness to put money into U.S. capital markets? Your deputy, John Zito, had written a letter to investors talking about the risk to the U.S. brand as well, the risk to U.S. capital markets.
Right.
Are you seeing any of that?
We will see it, but we're not seeing it yet. But think about that. The U.S. is still 60+% of all the capital raised in the world. We are in the absolute best position from a capital formation point of view. No one has what we have. That does not mean they will not want it over time. Everything that we want to do here, build infrastructure, next generation manufacturing, add energy, defense, next generation data and power. Europe wants to do exactly the same thing, but lacks any real source of long-term capital. In the Draghi report, Mario Draghi lays out what Europe needs to do to be competitive. And most of the report is focused on revisions to capital formation. Will Europe do that? I don't know. I think what John Zito points out in his letter, that they have the best chance relative to the U.S. to create this kind of positive momentum.
So then there's the question of what you do in this uncertainty. Now, recently you told investors just last week that you're willing to sit things out, you're willing to reduce leverage. However, you believe that you are one of the largest active buyers of assets post-Liberation Day. That is $25 billion in April alone. What are you buying?
So let's start with, I talk to investors and I ask three questions. Are prices low? No, I do not believe prices are low. They are lower, but we're still talking about an average PE as a reference in the mid-20s versus 16 over time. Are rates likely to plummet? I don't think so, and our firm does not think so. Most of what we're doing is inflationary. Third, do we have heightened geopolitical risk? Listen to our conversation. There's heightened geopolitical risk. What do you want to do if those three things are true? I think you want to reduce risk. In credit, we're going up the capital structure, senior secured, investment grade, trying to reduce risk. We're not trying to make money by being a good credit selector in a volatile market. And in the equity market, moving from things that are growthy and things that are venture-y to things that are cash flow based and more hybrid in their outcome. So what did we do in April? We bought mostly investment grade. Ironically, mostly in the public markets. I think we will see this interesting dynamic take place. We have a perception that what's public is safe and what's private is risky. But what if we're wrong? What if public is safe and risky and private is safe and risky? In private, most people are set up to hold things for the long term. In public, we have this belief that we can sell something every day. In equities, that is true. In fixed income, it is not true in the best of times. It is certainly not true under stress. It takes 5 days today to sell an investment-grade corporate bond. We should expect in every risk-off moment, public credit to trade poorly.
So what about the future? If you think that we saw some moments of market, let's say, seizure, right? You did see full moments where there were weeks at a time where the new issuance market was closed. Do you worry about liquidity into the year, given the way things are going? And do you think that the Fed would need to step in?
So I worry about liquidity, but in a different way than you're asking it. I think there's plenty of money in the world. If we use that as a proxy for liquidity, could we have tough treasury auctions around political events? Absolutely. I don't think that is actually fundamental. What I worry about, and the biggest buildup of risk I see in the world, is we are brought up with an expectation of being able to trade everything every day. Everything is daily liquid. Your ETFs, your open-ended mutual funds, and so on and so on. In the equity markets, it's actually liquid. In the credit markets, it's not actually liquid. We just don't know that yet. We've seen it in the UK in something called LDI, where people thought they could sell something, and it turned out they couldn't. We're going to see that. We saw it in the run-up to COVID. We saw a little blip in the market over the past few weeks, which is why we ended up buying. But again, this notion that everything that's daily liquid is somehow safe is just a notion. It's just not true.
So I want to go back to something you were saying before, that this environment that we're facing could be very inflationary, right? If you believe that we are facing an inflationary environment, what do you make of President Trump's bid to try to get the Fed to lower interest rates at this juncture? Do you think it's possible?
Good news. I don't have that job. It's not even in the realm of possibility for me to do. Look, we are moving things from low-cost labor countries to higher-cost labor countries, particularly to the U.S. There are strategic reasons to want to do that, but we can't deny that that is inflationary in some ways. We are not relying on a global trading system to the extent we have previously. That is inflationary in some ways. We have a tight labor supply, 4% unemployment. We have good job numbers. We have no legal immigration. That is inflationary in some ways. Yes, are there countervailing measures? Energy prices are lower at the moment. Technology will eventually introduce savings. The key word being eventually. At the moment, the policies we're following have a risk of being more inflationary than otherwise, which generally will lead to higher long-term rates, even if short-term rates come down.
Val, talk us through the moves in the Taiwanese dollar and what is underscoring it.
Yeah, less than an hour's time, or excuse me, over an hour's time, we'll be hearing from the Taiwanese central bank on what they're making of this FX move. But this FX move, Tom, is gigantic. It is monster. A near 7% move in the last two sessions. The move today, 2.5% stronger in that Taiwanese currency. What is driving this, and why is the central bank not stepping in as they normally would to smooth these market moves? There is some speculation out there, Tom. We know that the Taiwanese are currently negotiating a trade deal with the U.S. Could perhaps a stronger Taiwanese dollar be on the cards in those trade deals? Is that why the central bank isn't stepping in to react? We know that Taiwan has a massive trade surplus, a lot of that dealing with those chip exports like TSMC. They have a large trade surplus with the U.S., and perhaps maybe there's someone in the U.S. administration calling out Taiwan's weak dollar policy as perhaps a non-tariff barrier they wish to get rid of.
Oh, the chip industry. Look, my focus is on what this means for the boba tea drinkers in Taiwan, because they're going to get cheaper drinks as a result of this. The import of tapioca balls from mainland China is going to fall on the stronger Taiwanese dollar. OK, talk to us then about semiconductors, Val. You touched on TSMC. For the exporters of Taiwan, this is challenging.
This is not good news for the big exporters. We actually had an update on Friday from TSMC and another chip maker outlining exactly the hit to their operating margins. For every 1 percentage point move in the Taiwanese dollar, their operating margin is shaven off by nearly half a percentage point. So you multiply that by 7. It is not good news for TSMC and those chip makers. That is another question why we're standing around kind of waiting and asking the question why the central bank isn't stepping in to help their local exporters.
Bloomberg's Valerie Teitel walking us through some of those market moves around the Taiwanese dollar. We thank you so much. Let's go to Paul Dobson, our executive editor for Asia Markets, who, of course, is also knee-deep in what's going on with the Taiwanese dollar. Paul, Valerie just walked us through kind of the intrinsic and the dynamics of some of that, what's going on in that currency. How much of it is reflective of the broader Asia FX space?
Yeah, good morning, Chrissy. I think that's a really good question. Actually, quite a lot. So what we're really seeing is a bunch of exporters from all across Asia contending with this weaker dollar and suddenly thinking, just a second, all of my my cash that I've been earning recently, I'm keeping in US dollar accounts. Maybe I want to bring it back into my home nation accounts before the dollar goes too much weaker, because I'm losing money on the trade at the moment. And if the dollar is on this longest form depreciation trend, then that's going to be a problem. So it's not just Taiwan dollar, although that's where the most remarkable moves that we've seen have been. Also, the Malaysian ringgit is really on a tear. That also has a similar sort of exposure. Goldman Sachs has been pointing that out in notes. And we did a survey of Chinese exporters not too long ago, and they were also telling us that they were starting to repatriate their funds, which is quite a big change from the policy they've had for several years, where they've been happier keeping it in US dollar accounts where they can earn higher rates of interest. So right across the market, there's that sort of flow which is starting to catalyze some of the bigger moves that we're seeing across the region's currency markets as well.
Of course, you also saw the Hong Kong Monetary Authority buying this record amount of dollars over the weekend. Valerie mentioned, the intervention of the Taiwanese central bank and then the lack of. What do you make of the intervention side of this? We talked about the actual currency moves, but can you spot a pattern? She talked about the possibility for this to be a negotiating ploy in the trade talks.
Yeah, really interesting. So nobody really knows why Taiwan Central Bank has been less interventionist this past few days than is usually the case, where it smooths those moves in currency markets. And it may well be to do with the trade talks. It may well be that this is just a sensitive time, and probably being seen to weaken your currency would be undesirable in those moments. But what we are seeing is that the big moves and the dislocations that we're getting across the FX markets are forcing central banks to think, at least, about what's going on. And for currency that's pegged against the dollar, like the Hong Kong dollar, all of a sudden you've got to start absorbing flows in order to contain those rates as well.
Paul, a collapsing oil price, a tailwind for the nations of Asia that import oil?
Well, absolutely, Tom. And that's sort of going to be mixed up a little bit within the dynamics of the currencies. But for a buyer in Taiwan, for example, this is actually a bit of a double boost, because stronger currency gives you more purchasing power as well. On the flip side, in Malaysia, which is an oil-producing nation, less good news, because they're losing on both the currency and on the hydrocarbons as well. So it will have mixed effects across the region. But I think interesting and more generally, the weaker crude oil prices should be supportive for the global economy and should be good news. And certainly Donald Trump has been talking that up as a positive. There's just so much else going on at the moment; it's hard to focus on it.
Well, Paul, I can't let you go just yet, because I think you said a crucial vantage point, and I'm curious how much stock, speaking of Donald Trump, Asian investors are actually taking in some of these, say, positive or pulled back rhetoric coming out of Washington, D.C. right now.
Yeah, so I think over the past week, there was certainly a great deal of enthusiasm for the idea that the U.S. and China were getting closer to negotiating. I mean, a complete rupture in trade between those two nations is pretty damaging, not just for them, but for the rest of the region as well. It will either ratchet up prices or see dumping of goods from China into various other markets as well. Places like where I am, Singapore, would really much prefer to see the two of them getting along and having trade flows going on in a normal way. So we are very much attuned to everything that is coming out of Washington at the moment, every shift in tone, every nuance within the Trump communications. And, of course, a lot of it's happening in our hours as well, at the end of the U.S. trading day into the Asian morning, and that exacerbates those kind of moves, particularly at times when market liquidity is quite thin, which is why we're seeing volatile markets. And, well, if you're a market junkie like we are, Critty, then it's great fun to watch.
EDP's 5G Living Lab is transforming a 70-year-old dam into a digital innovation hub.
Vodafone Business has deployed 5G infrastructure to transform the way we do things better, faster, more efficiently.
The marriage of money and power is nothing new, but the arrangement between billionaire Elon Musk and President Donald Trump is like no other in the history of U.S. politics.
Come on up here, Elon. They're buddies. That's probably a good description, at least how Elon Musk sees it. Trump views Musk partly as his bank. I mean, Musk was the biggest donor in the 2024 cycle.
People throw around the word bromance a lot these days, but let me read this tweet real quick from Elon Musk. I think it sort of speaks for itself. I love Donald Trump as much as a straight man can love another man.
It's been a crazy 100 days.
Trump has been able to get Elon Musk to help propel through all the changes that were spelled out in Project 2025, a blueprint for reshaping the government.
Starting in May, my time allocation to Doge will drop significantly.
As Musk pivots, the struggles surrounding Doge's actions continue, while many Americans are reeling from a tumultuous 100 days.
I'm not sure we've ever seen a combination of two people, dominating the news cycle as much as these two have. It's hard to keep tabs on everything that's coming out of that administration.
Our greatest primary task is to put people to work.
Taking stock of a president's first 100 days is a convention going back to the 1930s.
When Franklin Delano Roosevelt took office, he made a point of saying, look, we have a new deal coming, and we are going to measure the first 100 days of progress. And it was an idea that stuck.
What he accomplished in his first 100 days was through legislation. This has been the opposite.
Trump and Musk via Doge are doing a lot by executive order. There has not been a debate in Congress. All of the social programs that we think of as being part of the social safety net in the United States, Social Security, Medicare, grew out of the New Deal.
If you were to go back to what a lot of people consider America's glory days, the late 40s, the 1950s, government had a huge role in American lives.
But Doge's mission under Elon Musk is radically different from the expansive programs of post-war America.
Doge people are pretty much in every government agency conducting, an audit. That's how they would describe it. And of course, attempting to downsize the federal government.
You look around the U.S. government right now and you see friends and allies of Elon Musk in all these various departments, in all these various top leadership roles.
Many of these federal agencies are investigating parts of Musk's empire. The federal agency that regulates highways and transportation has been investigating Tesla over its autonomous vehicle technology.
We've seen the gutting of the Consumer Financial Protection Bureau, and that's an agency that has been looking into hundreds of complaints against Tesla.
X, which is the company that used to be Twitter, Elon Musk has wanted to have a payments platform. The CFPB regulates that.
Doge is accessing quite a lot of government data, which is valuable for any company, particularly for someone who is training AI at X. Which databases they actually have access to and how they are using them remains one of the big questions in Washington.
You have deep personal and financial ties to Elon Musk.
Trump's tapping of billionaire entrepreneur Jared Isaacman to lead NASA also underlines Musk's influence.
It is hard to imagine a more pro-Elon Musk head of NASA than Jared Isaacman.
Isaacman has gone to space twice himself on SpaceX rockets. NASA is a huge client of SpaceX, and so building a strong relationship with NASA is just instrumental to SpaceX's future, not only because it's literally providing revenue, but because it's carrying out Elon Musk's vision of trying to get humans to Mars.
Musk is known for his uncanny ability to play the long game. And while he seems well positioned yet again, he may not have expected so much public blowback. Polling shows an unfavorable reaction to Musk and Tesla.
It's just really this incredible backlash against a brand which for decades had incredible support.
The brand issues with Tesla right now have gotten so bad, and there's so much ill will towards Elon Musk and Tesla. There's people vandalizing cars or vandalizing Tesla showrooms.
We certainly think it's despicable, the violence that has taken place against Tesla, the company.
Tesla as a stock has long defied gravity and fundamentals, but not this past quarter, which was its worst in years.
It definitely peaked right after the election, but since inauguration, it has declined by roughly 40%.
Analyst Dan Ives says the EV maker faces a code red moment.
People are increasingly worried about the economy. The trade war has a lot of people spooked. So Tesla's sales really dropped. Their first quarter sales were 13% lower than the quarter a year ago. And a lot of that is because of Musk and his proximity to Trump. Tesla's stock and Elon's wealth basically run on parallel lines. It is important to remember that Tesla is not the only source of Elon's wealth, but whenever there's a big drop in Tesla's stock, it does impact his wealth.
His net worth may be going down, but let's not forget about all the benefits he continues to reap from being so close to the Trump administration.
This is beautiful. Whoa.
Trump and Musk were together on the White House lawn, and Trump was basically trying to help to sell Tesla cars. To just have a sitting U.S. president sort of hawk the products of one of their biggest backers was just such a spectacle.
Yet not all of the Trump administration's actions have been in Musk's favor.
I'll continue to advocate for lower tariffs rather than higher tariffs, but that's all I can do.
Musk has not criticized Trump directly, but he's gone after his top trade advisor, Peter Navarro, who he called, quote, a moron and dumber than a sack of bricks.
Tesla is faring somewhat better than other automakers in that they make their vehicles here in the United States, but they do import battery cells and other components from China, and they are not immune to tariffs.
Stop the coup!
For Republicans now, Elon Musk is emerging as an increasingly polarizing and potentially toxic figure, yet at the same time, they also need him in a way. They need him to be able to bankroll those congressional races in 2026. Donald Trump needs his fall guy, but he also needs the bulldogs, and sometimes they're the same person.
The consequences of the chainsaw Musk has taken to the U.S. government are still being measured, as well as the success and failures of Doge.
The vision was a Department of Government Efficiency that was going to cancel contracts, particularly contracts around what we know as DEI, or diversity, equity, and inclusion, and root out fraud, waste, and abuse. So, in Doge's mind, they have been wildly successful. And on the flip side, there is a cost to laying off federal workers, to fighting all of this litigation in court.
Howard Lutnick, now the Commerce Secretary, said, how much money are you going to cut from the federal budget?
Well, I think we can do at least $2 trillion.
Yeah! Recently, Elon Musk said $150 billion in cuts by fiscal year 2026. That is a huge reduction in the goal, especially when you look at the promises that were made in terms of how much fraud they're going to find. And they just haven't found that much fraud. And also, you have all this litigation. It has also, in a weird way, showed that the government does a pretty good job in a lot of areas. But I think if you ask the broader Trump movement and some of these other people who have had a big influence on what's happening, and I'm thinking here of Russell Vought, who runs the Office of Management and Budget and is really like one of the key ideological architects of Project 2025, then I think it's been a huge success.
We want to put them in trauma.
He gave these speeches in the run-up to the election, and he talked about traumatizing federal workers.
Musk has carried out these very draconian efforts and has been the public face of them and has been somewhat gleeful about it. At one point, he posted about feeding USAID into a wood chipper.
That is a audacious thing. USAID was a big part of how America projected its competence, its compassion on the world.
For better or for worse, Musk has had a huge impact on Trump's first 100 days, but his role in the next chapter of Trump's term remains to be seen.
Musk isn't really leaving the Trump administration. When you have 6 companies, each one is like basically 1 day a week. So 1 to 2 days a week is like it's still a huge amount.
It's not like Doge is ending. I mean, Doge is a project that's supposed to continue until July 2026.
One thing we've learned over this last 100 days is that there is going to be a huge cost to Elon Musk for doing the things he's doing. He has basically taken his personal brand and tarnished it. And that's what happens when you put yourself front and center of some extremely controversial and often unpopular policies.
EDP's 5G Living Lab is transforming a 70-year-old dam into a digital innovation hub.
Vodafone Business has deployed 5G infrastructure to transform the way we do things better, faster, more efficiently.
A big question for Americans as well as investors as well. The first Trump administration they initially tried to free Fannie and Freddie from government control, get it out of conservatorship. What do we know about that experience as you look to maybe take it out of conservatorship this time around?
Well, just generally speaking, President Trump obviously knew what he was doing first term, knew it very well. This time it's like on steroids, and we knew exactly what we needed to do then, and we know even more so what we need to do now. Now, I don't mean that necessarily in terms of privatization. I mean that just generally. For instance, my predecessor was Mark Calabria in the first term. He worked very hard on this issue, but he worked hard on other issues. Many of the ideas that he didn't get done in his first term, we're now able to execute on and really drive performance in the business. And that's really where our focus is right now.
So on the issue of privatization as well, what could be different this time?
Well, I think right now what we're doing is making sure that these businesses are actually functioning as businesses, where people would find them attractive, where they weren't run with big bloat, where they weren't social engineering programs run by let's say, politicians, but instead where they were focused on safety and soundness and earnings. I mean, Sonali, we had 16,000 people that were working from home, essentially. We ordered them all back to work. We're driving efficiency in these companies. If I told you the waste, fraud, and abuse we found, you wouldn't even believe some of the stuff we found.
Well, be specific there. You've been talking about waste, fraud, and abuse within the agencies. What exactly had been happening?
Well, we, for instance, recently criminally referred some North Koreans and Chinese for working inside of Fannie Mae and Freddie Mac. I mean, what are the Chinese and the North Koreans doing in these companies? That's just one example. I could give you other examples of contracts that we've done. The bureaucracy between FHFA, so the U.S. Federal Housing, which I oversee, and the companies. We're eliminating the unnecessary bureaucracy between the agency and the companies to get things going. I mean, I've closed out probably over 50. I've made 50 plus directives or closures of excessive paperwork, stuff even going back to Obama's time where they were just reporting on them for no reason. The amount of nonsense going on is truly staggering, and these are going to be great American icons once again.
I'm sorry, can you be a little more specific there? When you said that there were Chinese and North Koreans working for the agencies, do you mean non-U.S. citizens? What exactly?
Correct. There were non-citizens working who were posing as either real Americans or, in some cases, contractors. And we also recently uncovered some other things where some of the Indians were also working inside of the companies as well. So more to come on that. But I think we've referred 5 or 6 different people to the DOJ just in terms of North Koreans and Chinese working in the companies.
So when it comes to your initiative here to really take a look at, you're saying waste, fraud, and abuse within the agency, is the idea here to clean up the agencies to become private entities?
Well, ultimately, that would be a question for President Trump. President Trump's going to be, obviously, is the deal maker of the century. I mean, there's nobody who knows how to make a deal better than President Trump. So if and when he does that, we will be ready. We are getting ready for just being operationally efficient, not necessarily privatization. And that is really where our focus is right now. If and when something were to happen, our main focus would be to make sure that there was no disruption to the mortgage market and that there wouldn't be any upward pressure on rates.
So ultimately, when it comes to the efficiency plans, how much does it fall on you versus Doge efforts to tackle them?
Yeah, Doge has not been involved in Fannie Mae or Freddie Mac. We would welcome them, frankly, because I think they're very bright people. But we are doing our own cost cutting, our own trimming of the fat, so to speak, and again, getting rid of some of this fraud. But again, we're really ready to focus and have been focusing, at least since I've been in office 8 weeks, on that operational efficiency side of things.
When you're looking at any potential issues across the Fannie Mae, Freddie Mac programs, are you looking at multifamily lending programs specifically?
Yes, I'm very focused on multifamily lending programs. In particular, I was unsettled with some things that I found in multifamily when I first started. That was part of the reason that I did some of the changes that I made at the board level, including the chairmanship, was I felt like I needed to get involved and have the FHFA director be intimately involved in some of the multifamily stuff. And that was one big reason that, we've been a little bit more hands-on, is to make sure that there's none of that nonsense going on. The good news is these are safe and sound businesses, but we're going to make them even safer and sounder.
What types of behavior are you looking into exactly when it comes to multifamily?
Well, there's been some things which we'll be releasing at some point where, people were underwriting certain loans and then flipping them either to friends or to colleagues and then re-underwriting them. So, it's mortgage fraud. We've had a big focus on mortgage fraud. We're going to keep focusing on mortgage fraud because we never want to have another 08 happen again. And under President Trump, we're not going to let that happen.
Now, a little earlier, you also said when it comes to the future of Fannie and Freddie, you are keeping your eye closely on mortgage rates. Of course, there's a lot of concern among a number of lawmakers that privatizing Fannie and Freddie could unleash higher rates. How could you ensure that won't happen?
Well, it's something that my friend and colleague, Treasury Secretary Scott Bessent, and I are laser focused on. We'll be working very closely on that, be studying the issue, figuring out what it is that would make sure that if and when that were ever to happen, it wouldn't be the case. But we're not there yet. And as I said, it will ultimately be up to the president. But look forward to working with the Treasury Secretary and making sure that anything we think about doesn't affect the mortgage market in any negative way.
So have you had specific meetings with the Treasury Secretary or the president about a privatization plan?
I don't want to say what meetings we have or haven't had. I do maintain a good relationship with the Treasury Secretary. And I think that, he's a great partner in terms of not just the topics that you're mentioning, but also the day-to-day. Treasury has certain rights and ownership in the company or rights to ownership in the company. And so I'd say one of the best things about this administration is that everybody is working together for the common goal of making America great again. And I'm very confident that that will lean towards making Fannie Mae and Freddie Mac great again. I'm very confident in it.
Ultimately, we're sitting in a period where a lot of people are looking at this as a very serious affordability crisis in the United States. You have a family that's long been in the real estate business. What do you think the administration could be doing to fix it?
Well, first things first is getting rid of inflation. And President Trump, as far as I'm concerned, has been doing a beautiful job on that end. Why? Because inflation kills the economy. It kills the housing economy. Sonali, for the last 4 years, home prices have skyrocketed. The price of drywall, the price of lumber, the price of cabinets, countertops, shower baths, all the raw materials that go into homes skyrocketed. And it made it so people couldn't afford homes. Yes, we have a supply crisis, but we also have an inflation crisis. And President Trump is all over it. And frankly, it's going to require a lot of work to reverse what's happened the last 4 years.
You know, speaking of the last 4 years, in it, we have seen significant issues with the banking system as well, and a lot of questions about the federal home loan banks as well. This is something where when you're looking at efficiencies across the system, do you also take a look at governance issues as well?
Yes, I'm focused on the FHL banks, as you mentioned. We are the regulator of those banks. I'm very focused on it. I met recently with the presidents of those banks and told them a little bit about my expectations around regulations and making sure that they don't get out over their skis and that we're going to be focused very closely on it. It's not something that gets a lot of attention, like, you know, the prospective privatization or not of Fannie and Freddie, but those banks are very important, as you know. We have $1 trillion worth of assets on the balance sheet, and we fund a lot of local banks and a lot of local lending. So stay tuned on the banks.
What will change ultimately? Because maybe a lot of other people might not pay attention, but certainly Bloomberg does, the banking system does.
Well, we're going to get rid of the climate requirements and the DEI requirements for board members. These are banks. They need to focus on lending to people in local areas who not only can pay back the loans, but who can benefit from the loans and really spur local economic growth, not on driving climate change programs through these local banks. It's nonsense and it needs to go. And I told the presidents of the banks that much and much more to come on that.
Control and monitoring technology with Vodafone Business IoT enables life-saving medicine to be delivered safely around the world.
Having a secure infrastructure that you can reliably use globally is a key ingredient for our success.
This is Wall Street Week. I'm David Weston, bringing you stories of capitalism. This week, trade is at the center of President Trump's economic policy. We bring you the story of what he's trying to accomplish and whether he's likely to succeed. Plus, Vanguard celebrates the 50th anniversary of its first fund. We'll go to its headquarters in Pennsylvania to hear from CEO Salim Ramji about what he thinks they've accomplished so far and where they go next. And birth rates are dropping through much of the world, with governments at a loss for what to do about them. We bring you the story of what one Japanese company has done to ensure it has a workforce for the future. But first, we visit the complicated world of Jay Powell, caught between a slowing economy, stubborn inflation, and a president who can't quite decide what he wants to do with the Fed chair.
And inflation is basically down, and interest rates came down despite the fact that I have a Fed person who's not really doing a good job, but I won't say that. I want to be very nice. I want to be very nice and respectful to the Fed. You're not supposed to criticize the Fed. You're supposed to let him do his own thing, but I know much more than he does about interest rates, believe me.
Larry, we have FOMC meetings next week. What do you expect the Fed to do?
I'd be very surprised if they moved interest rates. I think they'll continue to convey vigilance and a sense of uncertainty about where the economy is and their determination to monitor both the cyclical risks and the inflation risks. I think the Fed has to be very careful given all the political pressures that have been put on it, given that the tariffs are potentially going to be an important inflationary impulse in the economy, and also given the substantial signs that the economy is slowing. If I were at the Fed, I would be trying to have an uneventful meeting and not produce any substantial reaction in the markets. And my guess is that that will be their course.
President Trump seems to have a different view. He thinks that they should have cut already, that they're behind on the cut. And there is some slowing in the economy. We saw the GDP numbers, at least for the first quarter, come in light. We saw core PCE actually pretty modest this week. Is there a growing case for what President Trump is arguing for?
I think the economy probably looks softer today than it did a couple months ago, but I think there are also some troubling signs of inflation risk going up. I wouldn't argue with the market's judgment that the full set of developments in the economy points towards more easing than looked like it would be necessary a month or two ago. But I think it would have been a grave mistake to have eased already, and would be a very serious error to ease at this upcoming meeting. I think the results would be a lack of confidence in the Fed's determination on inflation, and that would mean higher interest rates at the long end, and that would mean higher mortgage rates, and would probably ultimately mean more economic weakness. So I think the president's advice is really quite misguided, both as to the substance and as to the appearance. As I've said many times, Fed bashing for a president is a fool's game. The Fed doesn't listen, and so short-term interest rates don't go down. The market does listen, and so long-term interest rates go up.
Talking about short-term interest rates, we had Treasury Secretary Bessent this week say that if you look at it, the short rates are below the federal funds rates right now. And when the short rates are below the federal funds rates, that really argues for a cut. Is that a good benchmark?
I don't think so. The two-year interest rate reflects the expectations of what the future short-term rates are going to be. So all that's really saying is that the market is expecting that there will be cuts. That's not the same thing as saying there should be cuts. So I think it's pretty analytically unsound to reason from the 2-year to what the Fed should do, and it's pretty inappropriate for the Treasury Secretary to be commenting in that way on the Fed. In many ways, it's actually even worse than the president commenting, because people understand that presidents are political figures who are called on to address all issues, whereas they think of secretaries of the Treasury as sophisticated financial professionals who should know all about the independence of the Fed.
The independence of the Federal Reserve doesn't depend on the will of the president alone. Congress set it up that way, and ultimately the courts may have something to say about it. Catherine Judge is a professor at Columbia Law School and has studied how the Fed has evolved.
So it was actually restructured quite significantly in 1935 to be significantly more independent. That year matters, actually. It was right after the Supreme Court decided a major decision, Humphrey's Executor, which made it clear that Congress was able to create independent agencies. And it was in the wake of that decision that the Congress really restructured the Fed to its current structure. And it's a complicated structure. We still have 12 reserve banks across the different country. But then we have the Board of Governors, and they all serve for 14-year terms, and they can only be removed for cause. And that really serves as the bedrock of the Fed's independence.
There have been times, even in more recent history, when the Federal Reserve seems to have been really addressing the concerns of the president. Under President Nixon, for example, that certainly happened.
Yes.
What were the consequences of that, and what corrected and what gave us Volcker?
Yeah, I mean, I think it was actually what happened with Nixon and Arthur Burns, who was then the Fed chair, that led to the Volcker era, and really what we've had subsequent to the Volcker era, which has been a real respect among politicians for Fed independence. And what we saw there is the classic stereotype of a president who wants a slightly healthier economy in the short run, is putting pressure on the Fed chair, and a Fed chair who felt the need to be somewhat accommodative to those pressures. And the result was really destabilizing. We ended up with a period of meaningful stagflation. So we had high rates of inflation, high rates of employment. It was not healthy for really the economy or for anyone else within the economy longer term. And one of the real challenges then was, how does the Fed reestablish credibility? How does the Fed convince the public, convince markets that it is going to tighten monetary policy even when it's facing pressure to be more accommodative? And Volcker really came in, took the reins, and had that long-term objective, and was willing to cause some significant short-term economic pain and to face some meaningful threats in the process. But he managed to do a remarkable job reestablishing the Fed's credibility.
Recent presidents in general have been reluctant to comment on the actions, particularly in monetary policy, of the Federal Reserve. President Trump has been very explicit, saying, I can say what I want to say. If I want to comment on it, I'm going to comment on it. Can he be free to, I'll say, jawbone the Federal Reserve, consistent with its independence?
I would say that's part of what we're trying to figure out right now. The challenge that we're facing with President Trump is not just that he has an opinion on interest rates. I think it's actually legitimate, and even though it's not been done in recent presidencies, not inappropriate for a president to be able to have a view. The challenge is he's expressing that view while also having taken the position that he has the authority to fire Jerome Powell, the current chair of the Federal Reserve, and while also having removed other commissioners from other agencies that have explicit for-cause removal protection. So it really is that combination of not only having an opinion, but having views about his legal authority that are incredibly expansive, that have the potential to really undermine the credibility and that expectation that the Federal Reserve will be able to maintain the independence that it's enjoyed and that has allowed the economic flourishing that the country has enjoyed for the last 4 decades.
If we are looking for guardrails, do they come from laws? We like to say we're a nation of laws, not of men. Or might they come from bonds? Because there's been a fair amount of reaction in the bond market to some of what President Trump has said.
I was going to say, I have to say, I've personally welcomed all of those reactions, and I think it's inappropriate for a president to be responsive to understanding what the market is telling them about the likely impact and the potential destabilizing impact of policy choices, of threats. That being said, we can't rely on the bond markets alone, and there's a lot of danger in that having be too much of an indicator or too much of an influence.
Coming up, tariffs may be President Trump's favorite word, but much of the world seems to have problems with it. We examine what U.S. trade policy can accomplish and what tools are fit for purpose. That's next on Wall Street Week. This is a story about means and ends. At this point, we all know the means President Trump has chosen to advance his economic agenda.
Tariff, tariff, tariff. I am a tariff man. To me, the most beautiful word in the dictionary is tariff.
But if tariffs are the means, it's not always as clear what ends he hopes to accomplish with them, which makes it harder to evaluate whether he's winning or losing.
Tariffs are about making America rich again and making America great again, and it's happening, and it will happen rather quickly.
All of us are becoming fluent in the talk of U.S. trade policy, whether we want to or not. But in the end, what is it that trade policy is meant to accomplish for the America the president wants to make great again?
So the goal of trade policy, I think, should be enhancing economic well-being in the United States and internationally, because you should be able to use trade as part of an economic strategy that grows an economic pie.
Susan Schwab served as the U.S. trade representative under President George W. Bush and now teaches international trade at the University of Maryland School of Public Policy.
This is not a zero-sum exercise where I win, you lose. It should be you grow the economic pie. It is a policy where you create rules of the road and then you enforce them rigorously. It is a policy where you make sure that as you build those rules, they are rules that, again, my opinion and historically our view of trade, Trade barriers are sort of the last result. You know, free trade, open trade, market-based trade is the norm, is what the goal, where you'd like to be. But reality is deviations from that norm. And you want to minimize the trade distorting interventions in the market. You want to use trade in the most positive sense, but you also need to be defensive because you don't want trade distortions to undermine your national security interests, the economic well-being of your population. But you don't want to pretend that trade is the be-all and end-all and that it's going to cure everything.
Free trade has gotten a bad name in some parts of Washington these days. And the accusation, I think, is that it has actually hurt some workers in some industries, at least in parts of the country. Is that fair?
Much as I hate to say it, I don't think we've ever had free trade. I don't think any country, no matter how pure they think they are is actually a free trader. Trade can impact, can hurt, and has hurt different communities, different individuals. And the question is, how much of that is, quote, structural? You know, how much of that is, I'm not sure that Americans ever want to make labor-intensive footwear or labor-intensive apparel again. And how much of that is unfairly traded imports that have been subsidized, that are dumped into the market, that are selling at less than the cost of production. I'll give you an example. In the 1790s, over 90% of the proportion of U.S. workers were in agriculture. Today, that's what, less than 2%, less than 3%. Nobody argues that U.S. agriculture is uncompetitive. U.S. agriculture is a major competitive producer, but we do it without the same proportion of labor needed. Productivity enhancements, technology has taken over that function.
And that has been a foundation of President Trump's trade policy, making America great again by quite literally making stuff in America again.
People claim we don't make things anymore. In fact, we make things all over the country, and manufacturing output in the United States has continued to go up and up and up and up, contrary to what a lot of our politicians say, Republicans and Democrats, by the way. Manufacturing employment has gone down, has been going down since the 1950s, in part because more automation, more technology, but also in part, if you talk about, for example, the China shock, late 1990s into the 2010, 2011, there was no time for structural adjustment, no time for the workers to adjust, and workers and communities were severely impacted. Their non-market economy model is a